Okay. All right. Um, let's take a look at what's going on today. Um, thinking about doing a little section here to talk about what's going on in maybe some of the bigger news events, or maybe just something that I think is interesting going on. The first one that I think is interesting, that I think is kind of interesting, just leave it there, is that, let's take a look here. And I don't know how to say this woman's first name. Right here. We'll flip over. This lady, Epstein's buddy, she's she's she got caught. She totally disappeared, and I'm gonna tell you right now, I don't think they're gonna like her talking any more than they wanted Epstein, and I think there's some pretty reasonable doubt that he's, you know, pulled a Hitler kind of thing. Didn't actually die, and I don't think anybody's gonna want her to talk either. That's my prediction, my guess, that she's gonna disappear somehow. All right, that's all I'm going to do in the news. It's nothing to do with finance or the markets. I don't think markets care at all. All right, so let's take a look at what happened today so far. The first thing I want to point out was that we have had a really sort of obedient bullish trend. If you have been following this system for a while, I think this will all just seem like pretty normal stuff to you the last couple days. And if you haven't, I really, really, really recommend that you go look at the last couple of days. Okay? Because I think the last couple of days, which when I say the last couple of days, I mean these days right here. So you're going to look at Monday, Tuesday, Wednesday, Thursday. Let's see. So it's the 2nd. So it'll be the 2nd of July, the 1st of July, June 30th. It's not like a weekend, is it? Nope. June 30th, the 29th and the 29th of June, which I think is how I have them marked. If you go look at those, I think this has just been like an excellent bullish move. It's just been obedient. It's been clear. It's been pretty easy trading, in my opinion. A lot of the times, the market requires that you operate on like 70% information. Like you don't know everything, and that information is usually built off of a couple of data points, and you're assuming their topology, the way they relate to each other. And so you have a couple of points and you'll say, well, if this is true, and if this is true, then that's true, and this is true. And you have to build this huge deduction network that can't be proven until after the fact. But the way markets work isn't by telling you what they're going to do, nor do they operate off of truth. No. What markets do is they essentially say, if this was a spectrum of analysis and this was 100% perfect analysis and this was just completely inaccurate. And there's a bunch of different ways to look at the market. Maybe these are like needles of truth. This one analysis does this good. They just find the one that's accurate enough. And if you're in the range of true enough, then what ends up happening is this is true. So we move the needle from actual 100% to whatever is the best available truth. And that tends to be the truth. So it's not important that you actually button down exactly everything. What's important is that you get to a threshold where that you're in the right zone. And I would even argue that if you surpass that truth, if you somehow figured out a greater truth about the market that was totally right, but it was beyond the scope of the people who make the decisions, like you were alone in your masterful discovery, you'd be wrong. You have to be in that right threshold. And but I really do think that it would be impractical to assume that you can outperform the people who can pay for it. I mean, that would just be impractical. They have very intelligent people working on things. They're watching things and stuff. I just don't think you would. I think there's just a threshold of the amount of work you have to put in, the amount you have to pay attention, if you understand how things work, that you just need to get into that true enough zone, and you'll know it because it works. So you're not looking for perfect truth. And you're not looking for like knowledge. You're looking for that like a certain level of almost ambiguity to operate from, and that is risk. Okay, so this has been pretty clear and clean, and I think that's an important note to bring up because it is a quality of the trend. We don't always get trends that are so easy. Yeah, I thought John was making a comment. I thought I'd just have fun with it. So right off the open here, we have, you see this decay scoots down here? No trapped orders. So decay moved down, gave us the signal. Well, it didn't give me the signal. This was the signal sent out. No sellers wanted to come in and pay for the backside of that signal. And so you could ask a question about that if you wanted to get a little nuanced about it. You could say, well, why? And this could be a question you might ask yourself. You watch markets, obviously, or you wouldn't be watching this. If this moves down and these people didn't, the market doesn't look like it's going to close the gap here or something like that. Why? Why didn't the people want to come in and pay to be wrong? Aren't you happy with these things? So what that sort of looks like to me is that the masses, the herd, the public herd, seems to think this is going to do this, maybe? Is that what you're thinking? Is that you think this is actually going to just gap and go? Is that what you were thinking? And so they didn't come in and provide liquidity at all. I think that's something you might just, the way you're going to, let me tell you the way you deal with this. You need to have a section in your brain where you can put variable or not solved. Okay, they're not solved. Basically assertions. And right here you could say, well, so everybody thought it was going to go up. Well, we could just take that little data point, call it data point number 1, and stick it into the variable data point. So we just remember that. And because I don't really know. I don't know what everybody was thinking. I don't know why they didn't come in. I don't know why we didn't get liquidity there. I can put that there, and you sort of keep that as a variable just in RAM, waiting. And it might help you understand maybe something in the future. All right, so you see decay pushes back up, and we do find people who decide that this is good, and they want to buy. And so they fill that, they see the signal, they react, it turns red. The bears obviously hit right here. And we come over here and you'll notice that these bears sort of had a little bit of a difficult time impacting tension, right there. It did tick down, but it continued up further in their faces. So there was a hit, and I think this was a smaller position. You could see it ticked down. Well, it didn't really. I mean, you could see right there. Maybe I need to get a little closer. In real time, it's a little easier to see. I don't usually like doing this, but you could see they really did have a difficult time hitting there. So this position, if the bears are here, I mean, they're hitting, but it's the breadth. It's the breadth of your position. The whole purpose of tracking tension around positioning is, it's not to see how big you are. It's not to see how big you are. It's to see how broad you are. Broad. Big would be like a big old guy. You know, these are his arms, this is his head. He has a lot of downside force. He has mostly it's density is what it is. He's dense. He's got you have one large position. It's not so much that it's dense. It's not the volume, it's the density. And what he's made of isn't what my picture shows, but it's equity, it's money. So you could be really dense with a lot of capital behind your position, or you can be really broad, and that's like a person who's leading a whole bunch of people. You're all over the place. You're everywhere. You're all over the. And what's interesting is you can be big, and that doesn't necessarily mean that you're super dense. And so if you sell a whole bunch of positions in all these different stocks, you have control of all of them. But if we summed it up, it may be that your broad position cost less capital than maybe a very dense position. But in my opinion, a broad position done effectively has a greater efficacy than a dense position. So just selling 10,000 contracts on the ES would probably move the ES a little bit, especially if you didn't have margin. But I think if you had distributed that across the stocks in an effective way that helped move those stocks, your impact, your footprint could have been a lot better. And so that's kind of the objective of using tension. We're using the trapped orders to show that there was the opportunity for a dense position. We're using tension to show that it was a big position. And so if you think of it that way, you could say, all right, well, we have the liquidity to support the density of a trader. The density being they want all the contracts. They don't want to spike that open interest, but it didn't really impact yours. It's almost like this is like a dense. Is that how you say dense? It's a dense position, but it's not broad. And you can tell that. So I want to point that out, that position there was good. Everything lined up and it was fine, but its impact wasn't all that great. Well, you could see that it did eventually impact, but I don't think that this ticking down was so much that the bears came in and were like, oh, we're so big, we're going to push things down. Because you can see decay pushes back under here, and immediately there's your trapped orders. And so this samples the bears who hit, but they're not really impacting. Then it samples the bulls who, you see price kind of popped up a little bit there, but they didn't do anything. And you see it moved down until those guys got shoved out. So this sweep down right here ended. So they got here, right? And they were like, oh, boom, and they dumped. So they got liquidated right there. So this is what they tolerated. You could sort of say they're unwinding here. This is what they tolerated. That's what happened. So those bears consider their position. You have to think about what was happening. They get this, it's not super broad. It's clearly dense enough. So they hit, but they're not impacting really. They hit that. And you have to ask yourself, why? I mean, what's going on here? Well, these bears haven't been able to get real control of the market for a while. They've had some problems. And I think you guys are aware. They've struggled. They've just been knocked out. They've been adding to a loser. It is not going well. So why would they get in with a smaller position? I think they're sort of being tentative. They're like, well, maybe-ish, okay. I understand that. They're not getting elasticity. The bulls, this wasn't a failure by the bulls. This was just no liquidity. So the bulls have not given a nod. There's no nod. Okay, bears, you can take this down. That's fine. That didn't happen. So why would you tentatively sort of sell this into a bullish position? Well, I think that they're being eager. And they've done this before, this mentality of eagerness. Come in before you get the opportunity. Just go ahead and show up. And it has backfired over and over and over and over and over. So I think the tentativeness here is showing us that they're not as willing to come in and be eager bears as they have been. And then they push this down into a bullish position and they're able to shove a little bit and then shove again. And they push those bulls out of their position. So the bulls right here have totally been liquidated today. Now this is like different than what we've seen a little bit before. And someone was asking me about this, is this just teeth? Well, yes and no. With these ones, you could see here was the teeth here. We got our sample. It was a decay retest. There was some liquidity here. It popped down. Everything just lined up. And the difference between these two events, because you could say, oh, this was a bullish sample. This was a bullish sample. This got pushed out and it bounced. This got pushed out. And it so far has sort of bounced. The difference is me and you. The previous times, there was a lot of structure in it. We saw the bears, we saw the bulls, we knew it was going on, everything was clear, yada, 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 right? It was like expected enough we were participating. Today's was just different. And it's not that it totally has fallen apart, but it's different in that right off the open, we don't get any bullish liquidity. Right off the open, the bears show up and they push down. And the first thing the bulls do today is nothing. And they get themselves pushed out and liquidated. So this is important in my opinion because it's different than yesterday. And it's different than the day before. So when you're asking about teeth in this scenario, yeah, you should still look for teeth. But this one right here didn't even really liquidate the liquidity. It just sort of pressured anybody who happened to be sitting. We didn't see tension curl down and then move up, but we didn't see that. It just straight curled down. So these are different characteristics. And I think that's important just because characteristics tell you a lot about what's going to happen. I mean, if you know what type of character the market has now, that can help you understand what types of things to look for. And so these type of teeth, which I was talking about, are just the one where you just sort of poke through and try to poke the stop, maybe thin a few people out. This one is where that we see it's the V-shaped one. It's where that basically the bears get everything they need to run the market, and anyone who's was long starting today didn't survive. So you can see that, right? Nobody survived this. How many people survived this? How many people survived this? You see the difference? So I think these are different characteristics. Today was about the bears were aggressive. They took a smaller position. I think they built into it, and the whole objective was just to push out anyone who was bullish. Nobody survived this if you're just intraday trading. Just nobody. The only way you could have survived this was if you were holding from some previous day. And that's one of the characteristics of a V-shaped versus the typical teeth that we've been looking at. We do see these two types. The bears, I think, are frustrated, or they got. I think the reason that bears could pull this off is because bears quit. I think that bears get their opportunity once all of the bears give up. I mean, once that they give up, that's what happens. So this is just sort of my way of, I think that's what's true. It's not part of the analysis. I just think, oh, this gapped up. I think everyone just got scared and walked away. All the bears are just like, I quit. So I think that's why they came in. But they were very tentative into the open. The bulls did nothing, and then the bulls got pushed out. So this is the character that we have. And I kind of want to go over this because I want you to see the shift in structure so that as things develop moving forward, you can see that the way that the structure changed helped build the backbone for how things develop further in the future. So I think it's important. So that's where we're at. Now, at this point, the question you want to ask yourself is what's next? And that's what you were asking yourself when we got, well, what do we do next? All right, we just pushed out the bulls, and the bears have this position that sort of worked, but it took a while. They were sort of tentative about it. They were eager, but they got paid. So I think at this moment, you can make the assumption that bears are motivated, right? They got their victory. They're at this point right here, they're doing their victory lap. They got everything they wanted. They pushed the bulls out. They're like, yay, we win. And in the victory lap, you really want to avoid chasing a victory lap because, well, because that's what happens. The bulls, I think for the most part, are just sitting and did nothing. So these are the characteristics I think that we're looking at. So what do we need to do next? Well, the first thing usually that happens after you defeat, in this case, you stop out aggressively the controlling party, is to resample. And somebody was pointing that out. So we started to lean up, looking to try and sample the bears. And so this lean moves up, and it's real nice. And then it just suddenly stops right here. And then velocity leans down, and it looks to me like the bulls all of a sudden were looking at picking up some liquidity. If we get velocity down, we're going to be sampling the bulls. If this moves up, we're going to be sampling the bears. So can you see something here? I want you to see something that's one of those little things that I think is useful to recognize. Does this kind of look like the opposite of this? It's almost like they're balancing each other. You see that? We went from moving to sample the bears, and then suddenly, I don't know what it was, but something changed. And the market moved from aggressively rolling towards the bears. It was going to sample the bears. The bears were going to get a chance to come in. Maybe they could pump tension down because now essentially you could call this a nod. They did nothing. So the bears could totally start moving this down. The bulls have moved out of the way. They moved. They're gone. They're saying, yeah, sure, bears, bring this down. So we were about to have that happen, and then what on earth? And look this is the market reacting to this change in character. All of a sudden, the market changed in character at that moment. I don't know why. So the bears were about to get that moment where they could drive an elastic market. Maybe it's just waiting. I don't know. But to drive that elastic market. And basically, the bears want to try and take advantage of releasing tension. Releasing tension. They want to take advantage of, as this moves towards zero, and they could drive price down and totally financially profit from taking advantage of that. And the only way you can do that is the controlling party moves out of the way. The other thing the bears want is they want to sabotage the bulls all along the way so that when we get near or to or through zero, that they could get it through zero, because it doesn't always get to zero. I mean, you can see that occasionally it'll just get closer to zero. So getting tension to zero is one thing. Getting it through zero is an entirely different thing. So you don't want to put them together. We have this whole process of how do you get it to zero? You use elasticity. The counterparty tries to sabotage the controlling party. As we get closer and closer and closer, there comes an opportunity where the controlling party is faced with, do we want to maintain our control? Do we want to continue to invest the capital? Do we want to continue to have the ability to control probabilities? And if they've been sabotaged or beat up too much along the way, or the counterparty gains too much leverage in some way, then the counterparty can take over. They can get tension through zero. So they're different. So we'll get to that. You get closer to zero, then if the counterparty's done their job as best they can, they'll be able to pop it through zero. And we saw that here. The bears had control for a while. They had this all down. And then you can see it was just a little slow off the open, and then it took off, and then the bulls had done it right. So when it got to zero, it just kept on trucking, and the bears lost control of tension in that moment. And so the bears are sort of looking at this like, how do we do that? So that's where we're at right now. I think the bulls have moved out of the way. The bears are thinking, oh, we can ride some elasticity, but we also want to see if we can get it to go through. So how do you sabotage the bulls? And this is where you have to start getting a little creative about this, because it's really important that you don't just grab onto an opportunity. You want to grab onto that opportunity and make that work for you. And so I think at this point, what's really important is the only way that they're going to get this down to zero and through zero is to beat up more bulls. They're going to need more. They're going to need a couple more. Because right now, if they push this down, look at how far they have to go before they find some more great bullish positions. I think, oh, that was not one. That's the one. This was the one that, yep, just that one. Okay, so they have a ways to, this is a lot of money. It's like we have to invest a ton of money just to get down and put pressure on the bulls who are likely just sitting here holding. Therefore, I don't think maybe there's some bulls here. The way that this V'd out, I think that what's happening is that people bought here, and now they're hoping the market will do the work and they want to just hold. They could have. We'll get to that in a second. What I'm trying to do now is take a look at the bearish case so that we can see what they see, so we can see what they want. Because you cannot defeat bears unless you really understand them. And so I'm trying to sort of paint this picture for them. And then we'll paint the picture for the bulls too, okay? So we'll get there. But I think this is what the bears are thinking. If we just shove this down, here was our official liquidity, here was our official liquidity, here was our official liquidity. So let me uncircle it. I'll just circle the ones that are actual, like the liquidity samples. There, okay? So this is what the bears are looking at. This, and you can probably smell that this is a little convoluted, but I do think it's what they're thinking. We need to get a bullish position in. If we get a sample here, we already beat them up here. If anyone's holding a bullish position, they're underwater. So this is how much freedom the market has without letting anyone who is holding have their money back. Okay, so what could the bears do to convince some more bulls to come in to assert themselves so that they can pump this down? Because, I mean, look at this. This is not elasticity. These bears came in too early. They're eager. And eager means pre-nod. So the bears need another sample. That's what they need. They need another position, because this one was just unstructured, and clearly it wasn't all that big. So it was like, oh, we got 5 contracts, and then it runs, and they're like, crap, I wish we had 1,000. And so they need some more liquidity to get generated so that they can get into a real position. But in order to run a position, you need to pump tension. I mean, elasticity requires some pumping. How do you pump tension? You need to take out the counterparty. Well, your counterparty, the adversary. So they need bulls. Otherwise, what's going to happen? If this leans up and samples these guys, and they pushed, let's say it had sampled there and they pushed it down. Well, who are they defeating now? Nobody. It's a while before they get down to the next position. It's a while. And these positions, since they're on the previous day, are likely wound up in hedging. They probably have things in place such that when you get down to their position, they've already locked in the capital and stuff. And using options and stuff, you can get into a position that can only retain its current value or increase. You cannot decrease its value, meaning that shoving it all the way down there is not going to force those people out anymore. They took too long. It's not going to work. So they got to find an opponent. They don't have one. And they need to find a position because they don't really have one. Do you see the problem that I'm seeing right now for the bears? They kind of got the nod, or they got the nod, but it was after their position, and now they're like needing to get in, right? So what's going to happen if the market leans down and samples the bulls here? This is important because this is the psychology that I think is the biggest deal right now. The bears don't have a position. So if the bulls show up right here before the bears get into anything, before they can establish, there is a risk that the bulls re-hit and continue to pump tension and the bears miss their opportunity. Because if the bulls re-hit here before the bears come in, that position could potentially push things up, and it's going to start smelling real fishy for the bears if the bulls hit, drive this up over that position, and then start pressuring these guys. You could see that looks to me like a bait and switch. The market gapped up high enough. If the market gapped up high enough that the bulls had this extra room to deal with, that's kind of how this smells to me. If I was a bear, I'd be going, wait a second. If they hit, we could be in trouble pretty quick. Okay, so and how I came to that conclusion was off of a known process. So this is that you take a look at what's going on. We know these guys are eager. We know they got out. Then you say, you need to ask the questions. Where's your position? Who are you? What are you doing? And how are you going to pump tension? How are you going to pull this off? What structure are you using? And in this case, the bears want to use elasticity. Elasticity is essentially taking advantage of the current tension in the controlling trend. So this is the current tension in the trend, and they want to turn this 41% into money. So as much as they can get out of it, they can convert that tension directly into price movements and have the money. The bulls are okay with elasticity because it gives them better opportunities. Tension's lower and they can get better prices. So it's win-win. So their mechanism, elasticity. Their tool, in this case, I think they need liquidity. They could use a decay retest. They could use open interest theft. They can use a lot of things. I think in this case, they're going to need some liquidity. Why? They're the counterparty. They need a good position to operate from. You can't just halfway trailblaze a new trend. You can't. You can't say, I'm going to start off an entire market without some liquidity. And this wasn't, just to be clear, this was not the start of the trend. This was hopefully maybe starting. Really, we haven't even started the trend yet. All we got was that these guys got pushed out. And so they got the big check mark says, okay, run your elasticity. Well, now they need a position and they need liquidity, which means they need this to pop up and sample them. And then the question is, who's going to pay you? And they need some bulls. And when you go look at the bulls, you say, well, these guys are out. So these guys, ooh, that's a little expensive. They need some liquidity here to push out, or here, something that can make it so they can get that tension to start curling down and moving. They don't have that. So right now, the bears don't really have the things they need to make this work. That's the problem. And I really do think that the bears are really concerned that if they sample the bulls or find that group to pay them, that the bulls are going to hit. Do you see the stress here? I really hope that you can pick up in my opinion, the palpable stress for the bears. They have a tough task to accomplish. It's difficult to hand the market to your opponent, hoping that they'll screw it up somehow so that you can take advantage of them, and your opponent knows what you're doing. That's stressful. It's not as though the bulls have given up tension, so they're not. They could still drive this up at any point. I want you to understand the stress here of the bears. And we can pick up a little bit of that tension. And this is where that variable thing I think is this leaned down and we didn't get sellers. We didn't get any sellers. So there was some issues here with providing liquidity right off the open and convincing people to sell. People wanted to buy right here, which to me tells you that people are having opinions. There's things going on. The bears want to see the bulls get completely demolished emotionally, and seeing the market start to agree with the bulls and not be willing to participate in stuff. Well, that's an opportunity for you to sort of get your foot in the door, but it's also telling you that people have opinions. And if volatility starts going up, there's opportunities here. And I don't mean volatility like VIX. I mean volatility like people are hair trigger. They have an opinion. They want to get in. Now, that means that the bulls might start looking at the market again, saying, let's reposition. And that can stress you out. Opinions mean opportunity for the controlling party. It should stress you out. And so I think that right through here, while they're doing pretty well, they're also, I think, kind of tense. The bulls and bears know what each other are doing. This is a negotiation between people. And there are times when somebody has to win, but and this is one of the things that I've talked about a little bit, and I'll say it here, is that the only really good strategy at all is one where your opponent, I don't know why I did that, knows what you're going to do before you do it. And you still win. That's the only strategy that you should really focus on. One where that you don't have to have secrets. Your strategy will win, even if the opponent knows it. That's the one you want. And there's a lot of ways to accomplish these types of things. In the end, this is power. I mean, the ability to tell everyone what you're going to do and do it is power. So I think that you need psychological games. You need to convince the opponent that you are winning. You also need to mess with their head a little bit. You got to do the hope cycle. You got to convince them they're right or wrong. But in all of this, you can say, I mean, can't we say the bulls have control of tension? The bulls are going to buy the zero test, so they're going to maintain their control of tension. But the bears still counter traded it, and the bulls did it. They knew. It still worked, though, because then we screwed with them for a while, and now we're way up here. And so the point is that I think the bears knew exactly what the bulls were doing, but they still paid for the run. And there were opportunities in here for the bears. I mean, if you'd shorted up here, it's not like you couldn't have made money. It's just you didn't get to control the trend maybe you hoped for. And I think this is where all the deception really happens, is those gray areas between letting your opponent have a little, and he during that phase where he's winning, you need to augment his perspective. And sadly enough, this is propaganda. That is what it is. Turning little tiny victories into massive emotional bias so that you incorrectly interpret the same data points everyone sees in the future. That is propaganda. Propaganda isn't just telling you stupid things. It's giving you little, it's expensive. You got to give a little victory to somebody, and inside of that, you got to weave in your little lie. And the lie is you're more right than you are. You have more control than you think you have. And the root of all propaganda is the animal or non-human, and I think in markets it's the algo, the animal human. In this case, it's like day trader. It's the algo day trader. It's the not real and the sympathy. You can always tell propaganda because propaganda always has an animal and a sympathy. You have a picture of if let's say that Canada wanted to hate on Eskimos. Well, it'd be simple. You draw a nice little Canadian girl. She's so cute and she's happy, right? But then all of a sudden she's screaming, ah! And behind there's this Eskimo. And here's his Eskimo parka. And his eyes, and he has just one eyebrow, and he's running, and he has a tail like an animal. And this is propaganda. You make a monster, you make an animal out of one, and you can always know because you say to yourself, who do I feel bad for? And who is an animal and it's okay to hunt. Propaganda loves this model. So it's the algo day trader, the animal hunter. Propaganda works like that. And I think that during this little window of your win, so during your little win, their job is to pump enough propaganda into you that the sellers are the little girl and the controlling party is the animal. And in that moment, the bears just screw up. They get it wrong. They fight for the wrong side, and it leads to them being converted. They get monetized. Your emotion, the amount to which you're emotional equals the amount, maybe it's not a direct equal, but it equals the amount that you're willing to lose money. So if we take a look at this and you say, well, who do we feel for? Well, those hopeful underdogs. This is obviously an underdog story. And the ruthless bulls who failed, they're terrible. They're not even real. So we get this propaganda story. And that's where the propaganda comes in. Elasticity is the moment when pumping propaganda in the market is the best time. It gives that little bit of win. And the reason that you swallow the propaganda is because it comes with a little win. When it comes to like socialism or communism and what it is the win. The win is this statement. It's this statement. Of course you're better than others. Of course you are. You knew that all along. They play off of that ego. That's the situation. And the reason that you like this is because then it makes you feel entitled. They make it public so that this is no longer shameful. So it's good to be entitled. And entitlement essentially solves the Red Queen problem. The Red Queen problem, if you remember in Alice in Wonderland, the Red Queen said you have to run in place as fast as you can just to stay where you are. And that's the Red Queen problem, is that life sucks. And it comes down to the point that human beings are designed to suffer. The whole entire, like the Bible starts with, now you're out of the Garden of Eden, your life will be suffering. I don't think it was an imposition of suffering. It was that's what humans do. We suffer. Life is hard. There will always be crap. And the Red Queen problem never really gets solved, but if you feel entitled, you want to believe you want to believe that happiness, well, not happiness, that peace in your heart can be bought. You want to believe that. You don't want to believe that peace in your heart means you have to become a person who's different than a person who doesn't have peace. Because the big issue here is that everybody wants to sin. Everybody wants to sin. And by sin, I mean we want to harm others, or not even that. We don't want to care about everyone. We want to have peace in our heart while being king and queen and have all the power and happiness and joys and pleasures that life could bring. But that I would argue that essentially is sin, because that means that you're saying you're not a human being, because you have to hurt other people to get that. Life sucks. It's hard. And if it's not hard, you're probably standing on someone's face. We stood on China's face for a long time. They let us. We probably still are going to. The only way we could afford half of the gizmos and gadgets that we have is that we stood on their faces. They got paid nothing, essentially slave labor. America imported their hard work, though at the same time, it's like we kind of did pay for it because we let them steal our intellectual property. Everyone did. The byproduct of freedom is invention, creativeness. Communist countries can't innovate because their people can't take risks, because if you fail at a risk, you get your head chopped off and your families. If you can't risk, you can't create. Freedom produces innovation. Socialism and communism stifles creativity, so they have to steal it. So we sort of gave them our intellectual property to enslave their people. That was sort of the deal here. Which isn't a diss on us, it's a diss on their government for letting that happen, to be honest with you, because they sold their people to us. Anyway, so it's a solving the Red Queen problem. That's why you swallow the propaganda, is because you're like, I don't have to work hard to do well. I can just say I do well while doing nothing. People love this kind of doublespeak, the double think. You can believe two opposing ideas at the same time. You can't, but you really like to. And so you accept the propaganda because it suits you. And that's this window here. That's the elasticity thing. You have a little window to feed them that propaganda, to say, you guys are winning. You're doing so well. You're crushing it. The news comes out, supports you. You have traders online say things like, oh, this is going to, like, you get so supported during that propaganda phase. But the whole point is just to get you to be sympathetic with your own ego and to animalize anyone who opposes you. And you can always pick up on it, because if you see somebody online who gets all frustrated and angry and they treat people like crap, it's because they drank the punch. They think that if you disagree with them, they think you're an animal. They think you're an algo. Or you're a bot posting online. It's like, well, apparently you drank the potion. So I think that's what's happening here. So that's the root of elasticity. Well, it's not the root of elasticity. It's one of the root reasons that elasticity is so important psychologically to trends. Okay, so we got through all the fun stuff. That's exactly what a bot would say. I mean, exactly. And they would say it clearly. Yeah. So there's a lot of, I don't want to get too off into like psychology and politics. The point is, I think we can look at this and we can understand how you drive a trend. Propaganda is absolutely fundamental, crucial. And I want to make something really clear here, that, and this is maybe me just bending your ear because I can, that I believe that propaganda is really close to branding. I mean, really close. And when I say branding, I mean a no-value product with a high-value brand. It is, and I think this philosophy right here is the core of all economic issues. When people believe that branding is more important than value. It is not when somebody says, I have a product that's kind of cool. Maybe this is my product, it's kind of cool. Well, if you make it a little shinier and you show pretty people playing with it, you brand it. But sometimes brand is important to the person who's purchasing it. Sometimes people don't buy a Tesla because it's an electric car. They buy it because we like Elon Musk. He's a little crazy. He does cool stuff. We like Tesla. We like Starlink. We like the fact that we're going to outer space. We want to be part of the future. The brand is a huge part of the product. So the question is, what's the product you're buying? Is it an electric car? No, you want to feel like you're a part of it. So you could say that the product is the brand to some degree, and that's okay. The problem is that when you're selling a product that has no value, so the brand is not part of the product, and the brand is all the value. And I think that is essentially propaganda. When that you are selling just brand. That is propaganda. When you're convincing a society to go into communism, that's all brand, no product. It is just a downhill, and you're telling them all about the uphill. You guys are the special people. You're so special as society degrades. So it's all brand, no product. And so this is my opinion. That's propaganda. So branding is a slippery slope. I think it's a good thing, and I love branding. When I go shopping, I love to interact with a brand. But I make this assumption that if they work on the brand, they also worked on the product. But that's assuming something really important, that is that investors believed in the product, so there was enough money to do branding. And this is a bias that we all have. You say good branding means good product. And a lot of times it's true, but if you have socialism or communism or a market that's highly controlled, then what can happen is that we can get money moving just straight into product because we don't need investors to believe in value. And communism does this all the time. Like, they just tell you where the money goes. So we don't actually need good products to cause competition. Then only good value gets branded. We don't need that. So markets kind of have a tendency to lean a little bit that way. That's why I think that they use propaganda, is because I think a lot of it's highly controlled, and we don't need a highly valuable bear trend to get a lot of branding. In fact, it's the bulls who probably fund a lot of the branding or the propaganda. I just think that's how it works. You want to sell, and you sell, and then the news comes out.
Much there?
No, I got a little while.
A little there. Are you so close?
I'm close. I'm not so close.
Are you close?
I've never been on an electric scooter, no. No, Alex, you're saying, have you ever ridden a Tesla? No, I think that Teslas are awesome. I've been really close to buying one because they're cool. I like the product. But you cannot tell me, people don't tell you I bought an electric car. That's what you say when you got an electric car. People say I got a Tesla. They love the brand. Part of the product is the brand. It is the brand. I think Tesla is a perfect example of this because you want to be part of Tesla. You want to be part of the whole Elon Musk world. We don't live in the world. This world belongs to Elon Musk, and he lets us live in it. And you want to be part of his world because he has an awesome worldview. He believes Star Trek can be real. And I think everyone who's in their 30s, 40s, and 50s would absolutely love to see Star Trek be real. I think if Patrick Stewart put on his Star Trek uniform and ran for president, he would win by a landslide. We would all say, yes, please. Patrick Stewart, Captain, just call himself Captain Picard, lead America, we could use it. He would win. We love that. It is so good. I don't think it's generalized. I think that business operators, you have to decide how much of your brand is the product. And there are some things that you purchase that are just all brand. And that it's not to say that the product doesn't have value, it's that the product was the brand. For instance, your pants. A lot of people will pay just for the brand. The product was worth crap. It was made in Indonesia for 2 cents. And you sort of knew that. All the money was brand. So brand can be part of the product. In my opinion, it only works around people who care about brand. So it's sort of an acquired taste. But yeah, the whole point is that brand can bring a product value if brand is part of it. That's what I mean. If buying the brand was what you wanted, that's okay. The problem is when the brand is straight up a lie and there is no product. That's the thing I mean, is when somebody says, I'm going to sell you the most wonderful, awesome thing ever, and you get it, and it is the thing you got, but it's a piece of crap and you hate it and it's trash. And so you were sold brand when you wanted product. That's what I mean. Yeah, I actually agree. Steve Jobs was one too. Apple, people believed in Steve. They knew he made Pixar. They knew you fire him and he goes and starts something amazing. You got to we love that guy. So part of the brand, you want the brand. You want to be part of the thing. So, okay, so we've gotten past that. I think you guys understand this. Okay, so look at this. We're getting our bear sample. we're getting our volume. We're getting close to finishing that up. So once this is all done here, then you say, all right, these guys are getting sampled. The question you need to ask yourself is, do you think the bears are going to show up? Well, this elasticity is not looking super great. The point was to see the bears get blown out, or the bulls get blown out. So let's take a look at what is going on here. For the bulls, we got so off track here. The bulls, they got this, they get liquidated to here. They're likely all holding positions from great spots from the previous day, and you're looking for teeth. This is the second type of teeth, the V shape. So when you see the bulls get liquidated, that's the spot where you want to look to buy in. And you'll notice something interesting about this. We have the origin, the teeth type 1, and then another stab down, teeth type 2. And this is not entirely uncommon. It's an aggressive V shape is what type 2 looks like. And the way that these V shapes start is and this is not, I'm not cherry picking today. This is what they look like. You get the bulls come in, or sorry, the counterparty comes in. They take out the controlling party, and it gets driven in a parabolic manner. And I don't know that I'll call this whole thing, but this looks parabolic to me. And I think that the aggressiveness here has that. The idea is that it almost accelerates. And I don't think that the actual price is matters as much as the way you experience it. So if you were sitting here watching this felt like it was just accelerating down. It just kept going. That's important because that's what this looks like. Now, to just double back and make sure you guys understand, type 1 is where that you just get that poke through. And typically with type 1, you have a decent amount of structure that happens before that lets you understand where you're at in the market. So we had some samples, we got an idea of how things were working, we could see how things lined up, where would be this and this and this, and then it happens. With type 2, you usually don't get a whole lot of structure. You're still sort of in the discovery process, trying to figure things out, and it just dives before you can get your bearings. And that's typical for type 2. I've seen this a bunch of times, and that's just the experience. You're just sitting there, and all of the sudden, why did that do that? And so you get this V shape. So what I'll do a lot of times, and they didn't liquidate here, they finally, is you can almost use the whole trend line idea, is just sort of, you have characteristic 1 that fits however this is acting, and then the characteristic changes, and once that characteristic changes, which could be viewed as a trend line in this scenario, breaking through, then you can kind of say, okay, the characteristics are changing. But even then, you sort of have to make sure you have structure. And like this, you have the trapped orders right there at the low. You had the liquidation right here. So it was like pop, pop. And so this was the type 2 is hard unless you're expecting it. Most of them are difficult unless you're. So if you're sitting here going, okay, this is meeting this sort of category, then as it happens, you can understand what's going on. And it's surprising once you sort of can interpret the intent of the market, that you traders will be so much more resilient than if you aren't sure what it's going to do. But if you're like, oh, I see what's happening, we're getting a type 2 type of liquidity, it could have closed the gap, I think this is really going to screw up a lot of people. And then you see that happening, you understand the plight of the bears, what the bulls could potentially be doing, things line up, and then you go use your regular tools that you like for entries and stuff, and you're like, well, I know what's going on, so I should do this, and then do it. And you'll be surprised how that just having a brief understanding of intentions absolutely fundamentally improves your trading. Fundamentally. So I think it's, even though you may not have been able to pick up this low, knowing what was going on, and then right now understanding the plight of the bears and why that this sample here is got a lot of tension behind it, should help clarify what you should and shouldn't do, what you can and can't expect. So for example, can you expect this to fail? let me put that another way. Are bears worried? Yeah, bears are worried. Absolutely. It's a little expensive to shove this down, and I don't think that the bears look at the teeth the same way that we do. No, they're going to look at the root liquidity position. For instance, here and here, these are the ones that they're really going to be looking at. There absolutely will be people who liquidate down here. You know, if we close the gap, that would happen. But I think for them, they're sitting here going, we need a counterparty, kind of thing. This is stressful for them. So could it fail? Yes. I think that there is precedence for that because of the anxiety around this. Will it fail? I don't know. So your clarity here is a little bit lower. This is useful. Clarity tops and bottoms markets. It's clarity that does it. So I think with a reduction of clarity here, knowing that this could fail, it could do this, that right now your expectation should not be this or this. That's insane. Her clarity's low. Our champion right now, the bears who have made some progress for themselves, they're right. That's like, oh man, should we hit this? We could hit this. If we hit it, we still need to find the bears. So if the bears hit, then we'll see a lean down, and the probably velocity would sample or decay would sample. Right? So if the bears hit, they're going to be taking advantage of not liquidating bulls, but the market leaning down to sample the bulls. And then once that happens, then the bears are going to get to find out, are these bulls going to hit? Now, they could fail. They have a position. They've liquidated the controlling party, so they've shown us they want to hit. So they're probably going to hit. They're probably going to hit. They've been doing that. The thing is they need to start making this happen. So this liquidity spot right here needs to do that. And I think we just saw the hit. So I'm going to say that this was a hit. Hit is price only. Nice. Did he? You keep playing around with micros. So we had our hit. The next thing we need to see is impact. Are they going to be able to take advantage of tension? And this, I think, is actually kind of unique. We don't see this a lot, where that we get the counterparty, get the nod, and then tension rises higher before they hit again. Interesting. Just keep in mind the stress of the bears. The bears need to drive this down, find some bulls, and run those bulls out in order to pump tension lower. That's the thing that's going to drive their trade. So we're leaning down right now. The stress level is definitely here for the bears. The risk is real. They're hitting. And so you're saying, why are they hitting? Well, they think they got this. I mean, that's it. That's it. We're going to sample the bulls. I think the market really needs to sample the bulls here. If the bulls hit, these bears are going to be in for a really interesting ride, because if the bulls decide to hit, they're going to be able to pump tension higher, liquidating this very position. And liquidating that position will probably bring this one back into the green, and that will probably motivate people to take this one out in the red. So the bulls are sitting here thinking, okay, so should we hit? Should we not? Do we want to burn this off? Don't we? Would it be nice to maybe just let the gap close and then do something, get a better position? These are hard questions to answer, but understanding the scope of this is going to help you more than answering the questions. Just knowing the questions will change, should make a difference, because then you know the scope of what these traders are looking at. So they're hitting, we're getting this down. We got 37. We got to see a sample, and it looks to me like a switch back here. And we get the sample, then we switch back, get another sample right on the other side. I only count a switch back if you can kind of, there's like some room there. It's not just like one tick up and back through. That's not. Okay. So that's the risk. These bears, they're trailblazing. Well, they're taking advantage of approved elasticity. So that's what, okay, so here we go. We're getting a little bit closer. So once that hits there, we start looking at if this could, and I just want to point out, because velocity is so close, it could reach down and they both sort of sample at the same time. That can happen. Then you watch for the trapped orders. The trapped orders should line up with it just fine. So Cheese Sandwich asked, would you consider bulls hitting as being too aggressive? Wouldn't you like for tension to burn off a little?
I have one hand.
No. I don't think it would be too aggressive. I don't. Oh, good job. I have one hand too.
So that's two hands.
Oh, are you trying to get through there? So I don't actually think institutions are aggressive. I think that's a term that I think I know where you got it from, but I don't think that institutions are aggressive. I think they are early or they get the job done, or they're wrong. I don't think of it as aggressive. The bulls want to come in and hit. They have the right to do that, and that right is given to them because they have control of the possibility space. Things will move in their favor if they choose. The only reason the bears could run this is that the bulls got liquidated. And they didn't get liquidated because they had to. So these people were not forced out. They chose to. They had control of probabilities. They didn't need to fail. They said, hey, how about you guys burn this down a little bit, and then we have more upside room, and we could get some better prices. It was a negotiation. It was not a matter of loss. So the controlling party has dominance. It was a permission. This is by permission. So if the bulls come in and hit, they have that prerogative. It's their market. Can I define a trapped order? Yes, a trapped order is... Okay, so I'm going to rewrite that. A trapped order is volume across stocks responding to known stimulus. Well, okay, so this is liquidity. I went a little too far. So it's volume across the stocks. And so that's what's happening. You see the volume in the stocks. That volume is bundled up and used in the index. But this is not part of the trapped orders. This is what the trapped orders indicator is looking for. An order is trapped when it's reacting directly to a known stimulus. You stimulate it, you see the volume trap in, you know why they're there, who they are, what they're doing, and then you can use that to trade against they are trapped. Essentially what traps them is the fact that they're predictable. It's not actually that what they're seeing or doing is right or wrong, it's predictable. That's what screws them over at the end. Okay, so it's moving down. We had a little bit of a curl up, still. Okay, that actually goes in the trash. And that is brand new, and I don't want you to... Let me use it a little while before you turn it into a toy in the backyard. So we're still filling here. So these sellers are filling in the stocks, the stock market, and they're reacting, and this is a bit of an assumption. I think it's a very good assumption, but they're reacting to the fact that the energy inside of the market momentum, the energy has turned negative. They see that it was positive, the energy has turned negative. They are chasing the idea, the holy grail, that negative number, it's number polarity.
Daddy.
predicts
that.
profits. It's that they want to say that if a number is positive or negative, that means that they are entitled to profits in one of those directions. It is a completely misconstrued nonsense that a positive number means up and a negative number means down.
Joe's.
It is accurate to say that when people, yeah, I don't know. I don't, wait, what, who?
Joe. Under there.
Oh, I don't want that in the house. Oh my gosh, just a second. Okay. He found a box that had like 5, I call them earwigs, little pincher bugs. Huh?
Pinch.
They're earwigs. They go in your ear.
Do they go in my ear?
I don't know.
Why do they have ears?
Because we call them earwigs. I've never heard of one in an actual ear, but I worry that they would. Don't worry, I got rid of them.
Did you food in the trash?
Yeah, I did. Mm-hmm.
But my food is in the trash?
Oh, that food was old and bugs were eating it. You don't want to eat that food.
What's in it?
Bugs.
What lives in it?
Well, at this moment, earwigs live in it. Okay, so there we go. Our bulls have just picked up a sample here. Now we're going to be able to see, oh, and look at that. They got that too. So I was not quite, okay, so it was, let's get a little bit zoomed in here. There we go.
Avocados.
So they didn't quite get volume. It looks like that volume happened at the, sure, call them brains, yeah. Brain bugs or something. So it pushed down and they didn't quite get volume there, but we had this sample running. So the bulls this is sampling the bulls right now. The volume has been created. It's being offered to the bulls. Would you like to consume it? And the only way to know if they will or will not hit is to know their intent. That's why we're always seeking intentions, not signals. Yes. That's nothing. It's nothing. So if you can determine they intend to hit, then you can know that they'll consume that liquidity and it allows you to participate with them. Now, obviously you get a better position if you understand their intentions. You could wait for it to work and make assumptions, but in my opinion, that if you're participating in their liquidity after they're finished consuming it because they consumed it, you have no idea what you're doing. You don't understand what's going on. You don't have a beat on the market. You need to know that they want in. You need to know that they're going to do it. You're like, oh my gosh, they want to play. Now, right here, we established there was doubt about these bears, but they have been given elasticity. So they were pushing this down to sample the bulls. Now the bulls are getting sampled. This is not the same as what happened earlier today. Earlier today, they were being eager. These guys were just being eager. This one is being compliant, or they got approved essentially when this nod happened. So they're hitting because I do not think that the bulls will show up here. I do not think that they should. I think that the bulls should maybe let some elasticity happen, see if we can get this down, and maybe we pop the market up tomorrow. I think that makes perfect sense. Now, they don't have to do what I want them to do, obviously. But in this sense, the market has been pending as elastic, and now we have elasticity in place. We have our bears in here. They got the nod. So they're here, and their objective, what they want to see happen, is tension curl down and start to move towards zero. And I think the bulls should move. I think they should move out of the way and let it happen. Because, I mean, we could come all the way down here, close the gap. I just think of how many people would hate that. It's like it already bounced, and then it closes the gap, and then we can keep moving. We had 2 great days of trending. We got today where the eager bears were able to get into a position which was tough. Bulls stepped aside. We could cool this off a little bit and run this down. They don't have to do that. But as far as I can tell, I at least know what the bears intend to do, which is to try and take advantage of elasticity. I don't know what the bulls, maybe they want to come in. I don't think they should. I think they should move. Move out of the way. Get out the way. Let's burn this down a little bit so we can keep it going. Burger, we already got those. He just said, I'm waiting for a test of 0 on bolt decay and velocity, which we just got. So that's what I think they should do. I think that the bulls should move. They've established that this has elastic properties. We've gotten the bears to come in. We could burn this down. The thing that sort of gets me not to be like, this is 100% is, it's 43. Like, sure, let them run it a little bit. What do you mean? Where can you show me what? Show you what? The 0. Okay, yep. Yeah, the 0 test. Okay, so velocity, right? This box, the McClellan velocity, is this white line, and it came down, and we got right to 0, and it's marked out there. Decay is the energy within that white line, within McClellan velocity, and it came up, tested 0, and then from above came back down and crossed again. There was a bullish 0 test here after a bearish one. So our bulls are sitting, our bullish sample is sitting right here. The bulls have been offered liquidity here, and they got a sample here. This sample did not get volume yet. This volume right here doesn't line up with that one. They got the sample right there, but we already have a sample, so we're good. We know this is here. We could, it could move down, and then I would say, okay, well, there's the sample for that one. Nonetheless, I think the market is looking at being elastic, and I think the bears came in and hit this down right here, and you can see they impacted tension. They got their tests, they got their trapped orders, and they're impacting tension, and I think they're doing that because they see that they were approved to do so. They got approved right here. When this popped down and the bulls liquidated their position, the bulls said, okay, burn this down. And this is how long it took to find bears. And now we finally found the bears. It took all this. I finally found the bears, and the bears have hit, and their hit pushed the market into the bulls' hands, and they're going, are you guys still going to let us run this down, please? Like you said you would. And I don't see any reason why the bulls wouldn't let them do that. I mean, the bulls did not need to lose here. This was not like a great victory by the bears. It wasn't like, yes, it was approval. You are approved. That's what that was. I think it's really important that you think that way. Bulls have control of probabilities. If I can control the probability of where you go tomorrow, I have absolutely control over you. absolute control over you. Absolute. If I ramp the probability of you going to Baskin Robbins and eating mint and chocolate chip ice cream, if I ramp that probability up to like 99%, 85%, you will be at Baskin Robbins at some point tomorrow. When you control probabilities, you have control. And so if I make it, if tomorrow you came to my house and somehow stole that control, I made you do that. And in that process, if you do gain control, now you have control. And that's how they have control. There was no reason for them to lose here other than a negotiation. They negotiated. It made sense to do so. They approved the elasticity. That's the way I look at this. I don't think, oh my gosh, bears, what were you guys drinking? Was it electrolyte water? How did you defeat them? It was bulls. Why did you approve this? What were you thinking? And in the process, you get it's the propaganda time, but it's also the window. This is the time when bears have the best chance to sabotage the bulls as good as possible so that tomorrow, perhaps the bears could take control of the market. And there's a negotiation here that goes on back and forth. So we're just sitting. We're just sitting. I can mark these. So we see those bears pop in there. We had some bears here. Just wipe this. Oops. There we go. We're getting the trapped orders for the velocity sample right now. We can see that this is here. There we go. Those are our positions today. So you can see they're getting their trapped orders. So it's sampled there, and now they're getting trapped. Now the market is even kind of leaning back up here, and the bears are potentially looking at this. I mean, you can see like the speed of it. I wouldn't really call that a bearish sample, but it's there. Maybe there's people who are like, it got defended, and or maybe they thought, oh, I don't know, and they could potentially generate some liquidity off of that. Yes. Cheese Sandwich said he means in terms of finding out the bull's intentions. Yes. Discovering the bull's intentions is the objective here. And the way that I'm determining their intentions, I'm going to move this there. The way that I'm determining their intentions is looking at what has been done. The bears were eager. The bulls moved. They let this happen. And that tells me a little bit about what they're doing. They're saying, well, why would you move? Well, you want to draw elasticity. You think maybe if we get tension down to here, we could run it from this point up to this point, and in doing so, it gives you upside room. No, bulls. Okay, so who has control of tension right now is the question. Who has control of tension? Who's in control? No, I don't think the bulls are moving their stops to take out the highs. Bulls, yes, bulls. This is abundantly clear. Why do I think that the bulls should move out of the way and let the bears drive this down then? Doesn't control mean always win everything, always take out new highs, always? No. No, it means that when you sit down to the negotiating table, you have more leverage. You can choose to do what you'd like to do. Maybe for the bulls, this was enough. And they're like, that was good enough, let's go ahead. Maybe, I don't know. What I can tell you for sure is that the bulls moved out of the way. They got liquidated. They got pushed out. They did nothing. They did nothing. They did not hit liquidity earlier today. They did nothing. That tells me what they're doing. It also signaled the nod. They said, okay, bears, go ahead, drive the elastic market. And it took this long to finally find those bears. It's been a while. It's been a while. The bears get their sample. Who's in control when the bears get the sample? The bulls. But the bulls have approved this. The controlling party said, drive elasticity, drive it down. How do I know that? Because that's how this works. The bears need to drive this down, get it closer to zero, and then something. The whole point is get this down to zero. You can drive, that's your scope. Go for it. Go on. So why did they hit? They hit because they'd been approved to do so. Now, if the bulls come in here, they're going to be wiping out the group they just approved to drive things lower to release that tension. Now, we were talking earlier, could this position fail? Yes. There's a lot of stress here, I think. You want the ability to drive it down, take some people out, and you'd like to have an impact, but I mean, look at how much work it's going to take before, I mean, getting down here, I think would be really, that's the next position. Are they going to be able to do that? I don't know, maybe. I think it's probably part of their goal. But I don't think that these bulls should pop in here. They already approved the move. Now they got the people they approved showing up, and just to turn around and totally lie to their faces, no, that doesn't make sense. No. And then these are not verbal. These are not just words. This is not lip service. They acted in a way that said, we're going to retreat, let you have it. Took physical cost. It was expensive. The bears took physical action saying, we accept what you said. We're going to take advantage of elasticity and try and drive this down. The thing that doesn't get me super excited is that it's 43%. Ugh. I like elasticity from like 60%. Or better, 80. Because that's a lot of tension. We could continue to drive this up well into tomorrow and get up to 70%. No problem. So it's not like there's a huge need. There's not like this huge need. So will the elasticity work? Will the bulls move out of the way? They should. It's not like the bulls couldn't liquidate these guys right here and say, just kidding. They totally could do that. They totally could do that. And it would pop tension, and tension would probably curl up, and we'd be closing at negative 60%. Totally. No problem. No problem. So the point here is not to tell you that it will this way. I think they should. Maybe they should build the trust with the bears and, let the structure play. But they really don't have to. They do not have to. And since it's only like 43%, we got a ways that we could keep going. The clarity here is just not great. We're not getting really nice, clear structure and stuff. Okay, so our sample's done. There we go. So you see that? It's all finished up. There's the second. So we had two little samples here. There was the volume to this one, and this volume was in response to that one. There we go. So we have our two samples. And look, what is this? Hopefully, let's see, Monday. Well, we have all day Friday. Market's not closed on Friday, is it? I really hate that when I miss those. Yeah, probably a lot. If that happened, yeah, we get a zero test off of that. So look, this right here, this bar is stress for the bears. The ones sitting here, the ones who said, okay, we accept that you're going to let us drive elasticity. Happy 3rd of July. We accept that you offered us elasticity. We came in and we hit it. The bulls get a double sample. The bulls hit. This is a hit. They're hitting. This was the hit. You see that pop? Right out of the liquidity. As soon as those trapped orders were finished, pop. And the bears are going, what are you doing? Do you see? Okay, so before we just had this like loose contract. Now we're getting some real conflict. I love conflict. I like trading conflict. This is conflict. These bears are now stressed out of their minds. But, 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 but. Okay, so what's happening here? And do I need to tell you? But you said. So look at this. It's moving up. We're getting 39. Oops. I'll draw it on there so you can see it's 40, 41. But, I think it's pretty clear what's going on here. I think the Bears just got worked over. And the Bulls have that right. There was no reason for the Bulls to not hit. The only reason that you could do that is to say that they did before. I think they should. And I'll tell you why. Because this whole situation right here could have led to some structural things that would have been beneficial to the Bulls. This move right here, if we get this up, we push through here, I honestly think that these guys would hold on till, I think they'd hold for a while. I honestly think they'll hold for a while. This is short-sighted. Short time, they're being narrow. You could have structurally had advantage, and you went with just lie to the people who play with you. So I think this is short-sighted. It's a little short-sightedness on part of the Bulls. Now, it was well within their rights. There was no reason that they didn't have to do anything. The point was that they had established that they were going to. The Bears came in, the Bulls get sampled, and now the Bulls are going, maybe we don't. Maybe we don't. We lied to you. That's the thing. Now, are they going to drive it up and fail the Bears' position and liquidate them? At this point, I don't see why they wouldn't. I mean, they already made it pretty stressful for the Bears. So if we just get this to move and they liquidate those Bears, I think you know exactly what's going to happen. This positions, it's going to cause a capitulation right through the highs. That's what will happen. The Bears are sitting here thinking, oh my goodness, we're getting pressured. This sucks. Because they just finally took a position. But at the same time, honestly, this is how long it took you to find some liquidity? Seem very enthusiastic to me. You eagerly jump in this morning, inappropriately. You get handed a win, and then you take hours and hours to find some liquidity. Then you finally do, which ends up in Bulls hitting back into your face. I'm sorry. You suck, Bears. So there we go. We're leaning up. Their position's probably sitting right here around 40, 41. I think if the Bulls would have to be able to pump this up here. Can Bulls pump this higher? 44? Absolutely. No problem. 44 is not a problem. I can tell you right now, the biggest thing right here is that these Bears are stressed out of their minds. This does not look good. They lied. This is like those situations where you're at school and you're like, hey, look at my leg, and you do like the little hand symbol, and then you're like, oh, you saw it, and you punch them or something stupid, and then you say, you're so gullible, and they're like, what? You just punched me. But that's kind of what this looks like to me. So that's how this looks to me. The Bears are just toying with, the Bulls are just toying with the counterparty here. So it pops up. Our stress is high. Okay, so let's take a look at what possibilities we have with this. So because that velocity is at 0 and decay is at 0, there's a potential for brutishness. If these Bears decide, no, you told us we could have it, and they decide to throw a fit, they have the tools to potentially push this down. But right now, I want you to notice decay is positive, velocity is positive. The best that the bears could do is resample the bulls who have control of the market. And it's really close. So if the bears really wanted to protest the fact that they feel lied to, let me show you what their options are. This is their option. We have, let's see, I can't actually quite tell if that is, So their option is this, and then this. So if the market popped up, I would imagine decay would head right through there. We get a multi-day decay retest. And if that position just never ends and it was to rise, then it would be all the way to matching up that one. These are the two options right now for the bears. That's all they have. That's it. And so this is the nearest one. Pretty close. So we just get that up right there. We'd be looking at a sample. I'd be looking at a wide short, remember? So you get the wide sample and then a short amount of time for the next sample. It's like the two leg or something like this. It's a wide short. That would be their next first option. And then once we have that decay retest in place, then running that out could be open interest theft for the bears. That's what we're looking at right now. For this moving up through their position, we get that up. What we'll see is a sudden pop, and that sudden pop will absolutely correlate directly to the realization that the bears are fundamentally screwed. This position. They got lied to. Hands down. They thought they were going to get something they're not getting. And the point here of this whole narrative is not to tell you what was going to happen. It's to help you understand the conflict that is in front of your face. You can see this right here created some conflict in the market. There's a difference of opinion, and we can see who has control. It's not like the bears have any control to say we make demands. Like, there's none. They don't have any. So if we could pop this up, we get it up just a little bit. This should shoot up to, I don't know, 31.48, maybe something like that. As they realize they're screwed, we could push it up, get to the 31.50, which is the place where the bulls made a oops. And just above that's going to be where the bears were too eager and popped in. That would be this. They get lied to. As that happens, decay is going to start retesting here, and that'll start developing a risk reduction position for the bears. Now, you'll wonder, well, the bears going to take that risk reduction. Well, risk reductions have a lot to do with, are you out? Can you get any liquidity? And no. So they meet the first requirement. They can't get a zero test by velocity or decay. Do they want to play? Yeah, I think the bears do. I think they do. They hit here and they hit here. I think the bears do want to play. So we're going to have to seriously consider this decay retest as it happens. And that is important. So keep your eye on that. If the decay retest shows up, look for the wide short. Make sure the structure's there, trapped orders, new lows, because you need to see the market lurch in your favor. So that's all these new extremes right here. This is the new highs and new lows in all the stocks. You can see the new daily high, new weekly high, new 2-week high, new 1 month high, new 3 months high, new 6 month high, 9 month, and yearly. So this is all of the stocks in the New York Stock Exchange. And this shows they're pushing highs and pushing lows. This number is the total for the current total, and this number is the bars delta. So the difference. So it's not that it was one new low. It means that if there were 10 new highs and 11 new lows, you subtracted those and you got the difference here, which was there was a surplus of one new low, and that one is going to get added to this. So that's how that works. So each bar those flip to zero. See that? That's because it's the new bar. So there was no difference. So that's what that is. And then you want to look for the stocks lurching in the direction of the decay retest to let you know that your retest is moving in your favor. That's how I use that. with the decay retests. You get the retest, then you get the trapped orders, and then you get the lurch. So now you're all prepped up for that. So you can see that we're still got a little bit to go to get there. This is just kind of pushed a little bit through. This does not look like liquidation to me yet. This looks like the bulls hit and they're impacting. We have bulls. They failed. Now they're doing great. We have bears. Whoops. So we have bears here. We have bulls here. We have bears here. This is our loadout here. The bears are feeling indignant. They're frustrated. They're stressed. You said we could take this down. The bulls are pushing this up. They just hit. It was a legitimate position. They can totally do that because they have control. But keep in mind that this is conflict because these guys just totally betrayed the bears. The bears were like, okay, we see what you said. But at the same time, and I want to make this clear, why did it take them so freaking long to show up? So that's where we're at. We're getting some good conflict. This is developing into actual story. Story is where that you actually care because it's interesting. Before it was like, nah. Now it's like, oh man. So story and good conflict lead to predictable movements. I mean, what are the bears going to do? They don't have control of probabilities. Their position is being pressured. It's upside down. They got it in. This was a bad. It was a bad short. It was no good. It was early. It was eager. So it's not like this one has any power. It's not like powerful. It doesn't give them power to push the market further. So this is like a weak spot right here. It's there, but it's not like amazing. And the bulls have a position. There's probably some lingering people who obviously didn't let go from where the bulls got it. So you know, we can sweep this up. I think we know where this is headed if that's the case. And all in all, it will have been a complicated, very sharp teeth. And I mean, look at it. Look at the way that this should be self-evident, but look at the way that this looks. When it comes to the moment where there's teeth, they look like sharp teeth. That's why I call them teeth. That's what they look like. I guess I could have called them triangles, but that's not catchy. What made bears eager? Good. Okay, so when you are the counterparty, right? You are the counterparty, which means you have no power. And power means the ability to control probabilities. You can determine where things are going to go. They do have power in terms of they could slam the market if they wanted to with their money, but they won't be able to sustain a trend. The probabilities, if you can control probabilities, you sustain trends. So you have no power to really control any trends, right? So you're the counterparty. The only way for the counterparty to take over, well, okay, the way the counterparty takes profits, takes some money, is that first, the controlling party gives you a nod, or they miss. They don't hit liquidity. They just do nothing. You see the liquidity and they're just like, nope. Second, you get a sample. So a lot of the times, if it's bullish, it'll be moving up. It moves down. The bulls will get a sample and they do nothing. And then the market, in one way or another, this is just they don't hit one way or another, you get a sample and you hit. And then you're able to move the market while tension moves to zero. This price movement isn't because you hit. It's because these guys moved and are permitting tension to fall. And you're taking advantage of that fall, that releasing to zero. It is an approved move. The controlling party did not need to move, but it was beneficial for everybody to do so at that time. So this morning, the bears get a sample. The controlling party here is the bulls. The bulls have not missed. They got in before it was clear that the bulls were going to move out of the way. This could have very well done that. There is no reason to not believe that this could have done that. So they got in early. They jumped in early. That makes them eager. And I say eager because that's obviously the feeling they're going through. Ooh, we could get in. Maybe the bulls will move today. They were fortunate that the bulls did. They were eager. So this position, while it's still legitimate, it was liquidity and all that stuff, but the point is that it was out of structure. I mean, they got in before that they were approved to do so, and it ran. This is the one that wasn't eager. This is the approved one, but it took so long. So this eager position right here, which is structurally sort of out of place, was too quick, ended up being made to win because the bulls wanted it to. This move down was the bulls allowing it to move down. They look at it didn't even sort of challenge their control of daily tension. If you think this was bearish, you're crazy. Look at that. It didn't do anything. The bulls didn't even sort of get pressured in terms of their control, even a little. They allowed this to happen. It's really important that you understand what makes them eager is that they got in before that permission was given. At this moment, as far as the bears knew, this was going to be closing higher. They didn't know this position was going to work until maybe about here. But right there, when the bulls liquidated their position, these guys finally were told, okay, you can come in. They did it all wrong. They did it all wrong. That's just how it works. Maybe this is just propaganda. I don't know. Let the bears win. Then they'll get all excited. Then when they get in, we lie to them. Looks like it's working. So that's where we're at. That's what happened. Now the bears got that sample and they're very vindicated. You know, they got that to work. They got the sample. And now the bulls are being like, up in here, get out of my house kind of thing. No. I don't know why I put my hands up. So I think the bears are extremely stressed out right now. This is pressuring their position. I have not seen it liquidate them. They're just feeling pressure because the bulls said they wouldn't and they did. The bears exposed themselves to risk, trusting the bears, which is fine. If the bulls move aside, that's fine because the bulls they're saying, well, we want better prices. We want lower counter tension. This, we want it lower so that we can drive it up. Well, they got the prices. Tension really isn't that bad. I mean, it's not like amazing, but it's not that bad. And so they let that go. Now the bears got another sample here. You can see this came in. So the bears got themselves another little sample here. It's about the same spot. The bulls are there. Are these bears going to hit? Will they hit? Are they going to hit in the face of the bulls who apparently are going to lie to their faces? Are these bears going to hit? Well, what was the problem here? They didn't have any bulls to push out. Well, this position's got some bulls they could push out. This has pressured these people. So these guys are stressed out of their minds. These guys are sitting around, they were eager, and now they're vindicated. Or validated, was it? So emotionally, this group is screwed. And this group here, But there's one problem. The bulls hit. So which one matters more? The nod here or the hit here? What do you think? Should we say to ourselves, well, the bulls said the bears could take it down, so, and now the bears have somebody to liquidate, so, bears are going to hit and the bulls are going to get liquidated and it's going to work? Or do you say the most recent hit is the one that matters, and so these guys are under pressure and clearly it's not working for them and the bears are going to fail? This is crunch time. Tough, because we have signals in both directions. So, what do you think? Because it's at this moment when you need to kind of know what you think, although it is sort of in the middle of the range. Not like the best spot to get in, but it doesn't make the conflict and the problems and the money invalid. The question is, are the bulls going to let the bears run some elasticity? Was it just the bulls wanted to come in and give them, or is it the bulls are lying and they're going to drive this up and they're going to keep this going? Or were these guys just allowing some shadow bulls to pop in so that the bears could actually drive this down? Which one? Because I think this drama is real. I think this conflict is real. I think the stress is high. I think there are opportunities here, and this is tough. Let me tell you what I think. Unless somebody wants to share before I say what I think is going to happen. There is an answer, and if you followed me long enough, you may know what I'm going to do. John, I agree. A move lower would help both parties. It's not like the bulls would be just taking a huge loss. Oh my gosh, the world is over. It's like, well, I can see somebody's typing, so I'll wait till you're done. This is a situation we get into where that you have sort of justifications for both sides. We built a case for everyone, and hopefully that's clear. I'm trying to build the cases. I want to create the two streams of reality that could coalesce, and I don't want there to be an unlimited amount of things that could happen. I want there to be like two, and we're to the point where that we have like two streams, two futures that could play in front of us, and they're pretty well defined in my opinion. Bulls are liars, and they're taking advantage of the authority they have. Or the bulls are not liars, and these are likely shadow bulls, and the bears are going to be able to drive elasticity and draw tension down. Cheese Sandwich says, I think bulls run bears out. 30-minute tension is not that high. Okay, so let me just write some of it. Whenever we have two really good cases to play, I start thinking, how can we just screw everyone instead of trying to benefit one of them? Let's screw both of them and benefit no one. Okay, so how do we just ruin everyone's day? So let's take a look at it from that light. Well, a move up would screw these guys over. A move down would screw these guys over. Now the bears want to see this move towards 0. So their scope here is sort of, I don't know, maybe to 20 or something like that. At best, right now, if they curled this down, they could get it to maybe here. So let's consider, if we move up, we're just going to crank this higher. It benefits the bulls. Bulls didn't get hurt at all, just the bears did. But if we move this down, if we closed here and the bears got that to there, and then we gapped up here, we could pump tension tomorrow and screw over these people here and screw over these people because they were expecting this to go further. We could totally screw them both and have a great time doing it. I think the market should do that. The market should just wipe them both out. So I think we should move down far enough to hurt them, and that means a curl down in tension, and then pop up tomorrow, and then move back up and say, well, sorry. That makes a lot of sense to me. That sounds like the market I know. Take out both people. Does it have to happen? No. Never. But in my opinion, ruining everyone's day is the best way to go when you have two clear possibility spaces. That's the one that I like to go with, is say, let's take a look at what would hurt most people. And I think a move down that doesn't last long enough, that moves back up, would take out both of these guys. And then we can deal with this whole situation and maybe even the gap. I don't know that this gap is in my purview or my scope yet. I think that just moving down would generally be harmful to the bulls, and then a move back up would then take out these bears. And it's not like, I mean, tension didn't burn, it's continued higher. So it's like the bears are waiting for an elastic market that's not actually burning. Like elasticity is supposed to take advantage of a burn. And the way that it burns is the counterparty comes in and pumps it down. And this just, I don't know. So why not just dip it down and shoot it up? Why not? Just do it. Just go ahead. Go ahead. Go right on ahead. So I think that makes the most sense right now. Do I think there's tradable opportunity? Yeah, maybe. For me, this is, we opened up and we were in the discovery, right? We wanted to figure out what was going on. Then the narrative changed. We went from, bullishness into sort of an elastic. This elastic idea through this area. Then we were waiting for the bears to show up. So in my point, these are all sort of starting points. And we're finally now, just now, in the develop point, where we're creating conflict, we're creating the drama. I don't think we're to the point where it's really inevitable. There's not like an inevitable outcome yet. I have a pretty good idea what I think a sensible market should do. And that's about it. I don't know that I think that this is really clear, but I think markets like to ruin everyone's day, especially in a situation where it's sort of ambiguous. Yeah, so I mean, I think that makes a lot of sense. So that's kind of what I'm leaning towards in terms of what I think the story should do here. Let's take out just everybody. But my clarity is, I mean, it's sort of low. We're just sort of developing these data points at this point. Where yesterday I felt like it was just clear, I was like, oh, okay, well, there it is. Here we go. Let's do this. And today it's like, why is everybody dragging your feet? Does anybody else feel like that? It's just like, why are you guys dragging your feet? This is a huge gap of information. It's like waiting. What are you waiting for? What the heck is going on? The bulls lied. Why are they lying? Just leave the market structure together. You start betraying participants, and participants don't keep playing. They quit. I mean, that's why I said I think this is short-sighted, because you move this up, you don't get an awesome trend. You get maybe your stops, and then the market just dies because all of your friends quit playing. You cheat at the card table, and you don't end up with all the money. You end up with no friends and shot in the back, probably. So I don't think it's beneficial to be short-sighted in the market as much as it's beneficial to keep the structure together. So I do think, though, that ruining everyone's day is that's what happens when you have two clear possibilities. And I think we do. So I think ruin everyone's day is exactly what should happen. I think that's the sensible and civil thing to do. John says either we take this higher and liquidate eager bears, or bears step back in the driven tension step back in and drive tension lower, which allows bulls to get a better position and they have a counterparty to liquidate. Yes, those are our two options. And I think it makes the most sense to just, because then at the end of the day, you're like, oh, so it drove it higher. But while it's happening, you're saying, oh, it drove it lower. So everyone gets punched in the face. I think that's what it's setting up, is a punch in the face for everyone. So let's go lower, then just to go higher. I mean, you could see that a move lower could again sample the bulls. Heck, it could drive tension all the way down and get a retest or something. This one right there. There's a lot of things that could happen. I just think punching everybody in the face makes a lot of sense right now. Just a punch for everyone. Well, I would call them shadow bulls. Because they're not acting like the bulls that I know and love. They're just not acting right. And I think that they're out of place. I think that if they come in and they hit and they impact the market, it's legitimate bulls. The issue is that in terms of structure, they're sort of breaking and betraying that sacred bond between participants who have lots of money. This is a negotiation. You lie to me and I'll quit. Or worse, I'll crush you. Which, when institutions start punching each other in the face, there's not much you can do. Because it's not like there's a ton of setups. They just go at each other. And the best thing you could do is just not get punched in the face. Just wait for him to finish the brawl, see who wins. So that could happen. But I think that structurally, this bullish position was out of place because I think they got a nod. And I think coming in here and lying is just not really what the bulls tend to do. And seeing the bears come and accept that tells me that the institutions playing here seem to think that the market was going to get elastic and we were going to start to burn this down. And then seeing the bulls come in, it's like there's these two mentalities. They're not communicating with each other. And what happens is when markets don't work structurally, they don't go anywhere. They just break. It's not like beneficial. We don't get huge moves. We get no moves. We get nothing. It's just nonsense. And it's not helpful for institutions, retailers, this analysis, anyone to break the market that way. It doesn't help anyone. They get this short-term gain for probably more pain and suffering than they want. Phil says, seems like chop around during doing nothing has been the plan for several hours. Most excitement was the move up to that bear position. Yeah, it was. But that bear position took too long. It took so long. That bugs me. I think they could have done a little bit better, faster, but it was a pretty decent move. So I think all the conflict started right here, right there. This got interesting on that bar. When those bulls hit, when they were supposed to step aside, this market got interesting. It was like, ooh, boy, howdy. But it just leaned up, sampled the bears, and now we're in a situation where you have duality, and I think this sort of thing is the sensible thing to do. Punch everyone. They all deserve it anyway. Yeah, and there's really not much else to be done here. Okay, so we're leaned down. There we go. We're getting our zero test. We got just popping through there. We need some more trapped orders. There's a little bit there, but the signal just showed up. We need to see the trapped orders as a response to the signal. This is the signal. We need to see it respond, not just near it. Because the whole point is that you generate liquidity by stimulating it. So, you poke a bear, he eats you. You don't want him to eat you before you poke him. That doesn't make any sense. So we got to see. We stimulated them. They fill the orders. So here we go. This is getting good. Did we get up? We didn't. We did not get up to that. In fact, let me do this. There's been a recent spike in debt. I mean, it's basically neutral, the debt here I was looking at. But for the last little bit, and I was following this for a little bit, you see this, it's sort of like directionally moved, but it's essentially just neutral in terms of the pattern that it's moving in. And dollar is, not much. Still soy, amazing. Don't know who it is that's trying to hop into soy. And if we take a look here, this is pretty similar to what we saw yesterday in terms of the low volume node. Right there at the lows there. I see we've sort of built up some volume in this range. So right here, that low volume node, there's another low volume node and the gap. These are the things that matter on the way down. So is that like it's about like 317, 310, and then the gap at like 3100. So those are about the levels on the way down that would matter. On the way up, I guess there's sort of but I mean, this isn't amazing. These are nice and clear. This one's not. All right. And I just got lines all over the place. This is too noisy. We can just remember. Is that fine? Can we just remember where they are? I just want to remember. Oh, bulls. There. Okay, so we're getting we're trapping these guys in. They saw the velocity move under. They are clicking the sell button. Trying to be like, oh, we're getting in front of the momentum. Move it down. So let's wait for this to finish up, and that will be the sample. So it wasn't that, it's this. Once this is done, we're going to be able to see that sample. And it looks to me like we're going to probably, with 5%, we get another bar or two. We probably get decay to sample at the same time. They had the double sample here, and we're going to get another double sample here with both of them at the same time. Look at that. More people. My goodness. You people. 25%. There's a pulse. So you ever wonder what I mean by like a pulse? That was a pulse. We were at 5% and now we're at 25. So there's like this pulse and like hitting or filling orders and stuff like that. But still, this volume is just I'm attributing it to the fact that people see that momentum going through zero and that this is predictable volume that's being bundled up and it will be offered to the bulls. Do you want this volume? And the bulls will in a friendly way let us know. Yeah, soybeans. Who's buying soybeans? %. Oh yeah, this blanket's sliding down. I wouldn't have a blanket, but I got cats with claws, and they like to show me that they can mark my chair. I want to respond to what you said, cheese sandwich, but I'm not. I think you might be like a couple minutes behind in the video. So he asked, "What bulls did today are betrayal," and yeah, to the whole structure. So I think you have to have open and reasonable negotiations in anarchy. Like international relations is anarchy. You know the anarchy symbols, that star with the circle. Anarchy. And what anarchy means is that there are two bodies, and they have some interaction with each other, and there is no governing or police. There's none. And what that means is that all the interactions have to do with one fundamental question: are you eternal? How long will I have to deal with you? And in anarcho systems, if I think that you're somebody I'm going to have to deal with forever, then we work together. If I think you are going to vanish, I betray you as much as possible right now. Anarchy is international politics, whether you like it or not. The fact that we have anarchy in the world, that is how international politics works. It's the reason that people want to be a nuclear power. If you have nukes, that means you're eternal. You are going to be a problem for the rest of our existence. If you don't have nukes, I can delete you, and you are no longer a problem. Therefore, people who have nukes don't get betrayed. People who don't have nukes get betrayed as much as possible. That's anarchy. I think it's insane for people to want to operate in worlds where there's anarchy, because it means that everyone who's murderous will betray you to the maximum amount possible. And even people who aren't will still betray you because they don't have to interact with you. The only people you can trust are the ones who are eternal, your family and your friends, because they're not going away. So you have to negotiate with them. And in a system where there's no anarchy, where you have police, essentially people are forced to negotiate with each other, because I can't, if I betray you, I get policed. So I'm forced to negotiate, and negotiating is significantly better. But markets are inherently anarchies. There is no policing body. If the bulls want to slam the market, they can slam the market. The only reason that the bulls and the bears get along is because they have to deal with each other for eternity. If I betray you, you'll betray me, and then we have nothing. Nobody makes money. Okay, I'll work with you because it makes me money. And they say, okay, I'll work with you because it makes me money. And we're locked in. And what forces anarchies to negotiate is the fact that players are eternal. They are not going away. I'm going to have to deal with you for a long time. It's sort of the idea of somebody that you hate and you're a jerk to them, and then suddenly both of you get stuck in at the bottom of a well together, and you know nobody's going to save you. Suddenly the two people become best friends because they have to. Because humans are totally great at anarchy. We know that you need to make friends with people that won't go away. And that's why that this was a betrayal. They said you can have it, and then they hit. Do you see why it's an issue in anarchy? It's not an issue if there's a policeman who's going to come in and bop the bulls on the head. But there isn't one. The bulls can do whatever they want. But if they lie and betray the system, the structure here, they don't get more money, they get less opportunities. Because the bears are not going to just take it, they're going to leave. And if the bears just leave, then the work is all on the bulls. And why would you care about the bears? This is politics. Why would you care about the bears? Because the people you run out in a trend, only like a small percentage of them are institutional. The rest is the people the bears represent. This is like it's like a rep. You know, if the institutional bear comes in and sells, they're able to stimulate a lot of sellers. And those sellers get blown out, and that's beneficial to the bulls. The institution is able to move the market as well as inspire their party. If you don't have the representatives playing, you don't get all the stupid idiots in the market. I mean, there'll still be stupid idiots, but you don't have a representative to deal with. And it basically getting all the bears together to work then lands on the bulls. And it means that you now have 2 to 3 times more work and expenses because you betrayed your buddy. That's why it was a betrayal. You can't just betray the system. It doesn't help anyone. It screws you because tomorrow the bears don't want to run elasticity, which will give you better prices, and you have a bunch of people there and all this. You need to talk to the reps, and those are the party leaders, and it's the bulls and the bears. They represent the buyers and the sellers. They're different. Buyers and sellers are people who execute orders in one position, and they're very small. Bulls and bears consume liquidity, broad market. They can move things there, huge. And they negotiate with the other side. You can't just lie. You can't say you can have it and then... That's not how it works. That ruins the whole profitability of the market for everyone. And that's the limit, in my opinion. The reason that it works is because it must if it's going to. That's why it works. That's why they work together. That's why you don't just see blatant destroying of each other face to face all the time. You have one party, then the other party, then they take the time and liquidate, and there's a little bit of time in there. It works because it must. So we're getting, you see this? Ruin everybody's day. So step 1 will be liquidate these guys. So let me draw where their stop is. So you guys, is their stop going to be here? Heck no, right? Let me just teach you a little price action. Okay, when you have a pivot, then you have a higher one, higher one, higher one. These little pivots make people feel safe. They just, such a sharp moving price. I'll bet sticking my order right under the pointy part will keep my order safe. That's the assumption. Well, then people go, there's this pointy thing, and there's this one. We generalize or we reduce it down. You say, I could put my stop here. Let me describe this logic. But that means I'm risking this much. Or I could put my stop here. I'm risking this much. But I think my stop should be here. I'll put it right in the middle. Okay, so let's just draw that line. This is what people do. I don't know. This is why I know you guys have thought this before. I don't want my stop one tick below the second pointy, but it's too far to be below the lowest pointy. So I'll sort of put it in the middle and compromise. And therefore, that's where the price will go and bounce. Why? Because that's what people do. You've done it. I know you have. You look for the pointiest parts and you try and compromise with yourself about risk and cost. You're like, well, I'm cutting down my risk because it's very pointy. And I don't, if I end up being totally wrong, I don't want to lose the maximum amount. So I'm optimizing by reducing my maximum losses and increasing my safety. And this is the wrong way to think about this, by the way. Reduce your losses and increase your safety. Get ourselves a nice friendly compromise between the pointies. And that's where markets go. Because that's what people do. So, the best opportunity will be to understand this silly psychology and just take advantage of it if the context works. But that's the psychology here. I think that's going on. As everyone who's been collected in this area is going to be forced to look at a losing position. They're going to be forced to see it negative. And so the market's going to optimize. Now, the market does get optimized. Do we want to drive this all the way down and push a new low? Or do we want to just hit as many people as we can and come back up? So, yeah. At the same time, I don't know. I'm a little concerned about it coming back up now. I mean, if now the bears have, my reason is the bears have somebody. These guys stressed out. These guys were a little early, honestly, but they let it down to sample. Now these guys, this right here is the #1 trade of the day, by the way. This is the best spot. We lined it all up. We figured out that it was ruin everyone's day and that moving down was the sensible thing to do. There were some other people who made that conclusion. So I think this was the best spot we've seen today. Now it's moving down and we're looking here. You see how we want to see this accelerate downward. So this is the price action spot, by the way. And there's a good chance that there's liquidity there. So one ticking through this position is not sufficient to liquidate an institution. They're not interested in negative numbers. They're interested in being wrong. Once you're wrong, then you dump. And it tends to be that being wrong correlates strongly with having your position upside down. And then you have your risk tolerance. And for institutions, what they look at is, well, where would it make us wrong? Institutions will probably not be wrong until we get a new low. Okay, so the reason that I point these two things out, the price action stop, which is where you pick the pointies and you try and compromise. How safe is it with how much loss I could take? That we can actually wipe out a majority of the stops without actually really eliminating the bullish position, which is really interesting. A lot of people will try to compromise in here, and that's just what people do. So we're watching for this to curl down. We did see it move down, but I want to see like an actual, like that. Or like how we had that curl up into the close, or, accelerates. That's what I'm looking for. At that moment, I'll say, okay, you basically liquidated this position. We can see them unwinding. But I think that these people know that it will be pushing a new low. And if they pushed a new low, I think we would close the gap. That's what I think. But I think right now, the whole idea here is get as many of these folks as you can, come back up, use those guys to springboard this up, and that could bring tension down. I'd love to see tension come down, and then maybe we could even open like this tomorrow and do that. And then the bulls then we can start to see the structure. I mean, you can start to see, now the bulls can go, okay, we got this all to work out. The conflict grew a little bit. We were able to draw out the things, see what made sense. Now we can see how the bulls can be priming themselves to drive another leg up higher if they'd like to. Right now, I think that the bulls, for the most part, are sort of just like this. Oh, here we go. All right, so we finished up our liquidity. So there it is. This is a sample. So we have sample, sample, sample. So it's the signal, then you wait for the volume to happen and finish, and that's the sample. So we have our sample. Do you expect bulls to buy right now? Do you think that they should be buying right now? Do you think that they should hit this liquidity up? There's the sample. And it's even a little lower than this one. Do you think they should hit that? Do you think that this is what we should do? Maybe we just don't, we don't have to hit those stops. I just was pointing them out because of that. I think that these guys are really, you're not going to get us to really liquidate until we get down around here. So question is, do you think that they will hit? And this is one of those intent things. You're like, I don't know. I don't know if they're going to hit. And that's right. You really don't. So we look at the structure. We look at how these guys have this idea. These guys have this idea. Pressuring them. Can we get them to liquidate? We push it down and the bulls get another sample almost, right the same area. Are they going to hit? I don't think so. I don't think they should. I think we need to ruin some days here. But if they don't, where are we going to go? So this is sort of the last stop for the bulls. If they don't pick this liquidity up, they're not going to get another shot at it. The next opportunity would be pushing this down and giving us some sort of a retest, either this one or this one. And that's a bit of a ways. So are the bulls going to hit? This is the trouble. This is the trouble. This is the narrative, and this is the problem. The important thing is that you really do understand what's going on here. These bears were offered liquidity, the opportunity to do this, and the bulls came in, stressed them out, got some stuff, were pushed down. Now we're back to the bulls. Are the bulls going to hit again? I don't think they should. I think they need to just move. Let this go. Let it go. Let the bears run it. Let them. You got your position in. It's somewhat upside down, and I think you can see, look at that. It's sitting right on the back side of that position. It is going, which this I think looks a lot like this, doesn't it? You see that? It's almost like, sheesh, what are you running the same algo? Wait, does that mean it's going to have the same outcome? Can everybody see this? Oh yeah, we can all see that. So this is a tough spot. In terms of clarity, I'm still... Let me tell you why I'm a little frustrated right now. When this bullish position came in and hit, they did. They did. They hit price, they impacted tension. They did position, which irritates me because it's so short-sighted, but it did happen. Oh my gosh, why did you do that? You could have made this so easy on yourselves. They just done nothing and let this move lower. They could have done this. But they decided that it was really important that they see whose is bigger. And so now we're leaning down and we're in this precedent where it's like there's bulls right here. So you guys did hit, so you're hitting now? It's frustrating because we're getting a flip-flop in narrative. Okay, so this is how I'm coming to this conclusion. One, if the bulls don't hit, it's their last stop, and we only have a half hour left. They don't hit, we're headed down. Bulls have already set up a precedent. They said, you can have it, bears, just kidding. Now we're taking up a position. Now the bulls have a target. These guys. Pretty good one. And this is starting to look like a little bit more narrow teeth. In fact, it reminds me a lot of yesterday. So I don't think they should, but they're going. I think they're going to. So I think what's going to happen here is we're going to move straight up, and then in the end of the day, we got just exactly what we wanted, and it was as annoying as possible. Bullish sample. This is headed up. We're moving through this position. I'm calling it right now. This is going higher. We got the stuff. We got the setups. They put pressure on everyone. They got the things that they wanted. We got it all set up. Bulls didn't necessarily lie, right? They said, well, now we say no to elasticity, so they hit, and then they bring it back down, and they gave everyone a chance, and they got it, and they say, okay, so we said no, now we're gonna hit. And I think this is gonna head up here, but I just it's such an annoying, like the way it's setting, the way it's working just sort of irritates me, but. But that's where I'm sitting at. I'm sitting here thinking, I think that now the bulls got what they got things set up. I think we're moving up, get through there, pop up. I don't know if we're gonna push a new high necessarily, at least today, but that's where we're at. So I'm calling it. I think this is the spot right here. This is it. This is the one, and this is the one. It's gonna move. I think we should move up from here. Maybe we get the value area higher, something like that. Retrace most of this whole spurt down. Yep. So over here, I'm going to mark I think their stops will be about there. I think the bulls are going to be chilling here with their stops, have it just sitting there. We're still in the counter phase here. You can see we had an impulse up and then an impulse down, and now we're in the counter move. It's countering the impulse, so you can see that because VoLTE is quite flat. It lets you know that that's what we're doing. Why am I so annoyed with this? I'm just so annoyed with this market right now. And now it's sort of moving back down, and it's not that it's bugging me. I'm just irritated. I just feel irritated with this. I'm irritated with it. Why am I irritated? I'm irritated. I am. I feel like it structurally they tried, and it's irritating me. I'm not even sure what to put my finger on in terms of irritation. I feel like something about today is driving me nuts. Rising, it's not even news, is it? Is that news? And nobody cares. I don't even know what that is anymore. Super chop. Maybe that's it. Maybe Phil, maybe you're right. Maybe there's just a lot of chop. There's not a lot of direct. I have done nothing. I want you to know I'm not doing anything with this. I'm irritated with this. I see it. I see what should happen. I see how these are developing. I know what the possibilities and the risks are. I just hate it. I don't want to touch this. It bothers me. So take that for what it's worth. You have my genuine thoughts, whether they're right or wrong, what I think's happening. I think we've done a pretty good job tracking along and keeping up with the narrative as it develops, but I'm irritated. I'm just annoyed. It's not that it's like this whole thing, like it's not that it's doing this. It's that I thought this was stupid. The fact that the bulls genuinely came in and hit. I thought this was stressful. I thought this was good. This is the spot where I think everything this was the most sensible spot to trade. I think this makes sense, pushing it down and then seeing the bulls pick it up and drive it up, because this would just absolutely irritate the most amount of people, but I don't want it. It's like something inside of me is like, you don't want it. And I can't tell you why. I can't. I don't want it. I don't want to buy. I should, but I don't. And I can't tell you why. I'm just annoyed. Bulls didn't really make money earlier. I mean, yeah, but they didn't really. Maybe I'm not the only one who's annoyed. Maybe they're going to go for those ones. I don't know. I'm irritated with it. I don't know. I just feel that way. Maybe maybe I'm wrong. Maybe I need to reevaluate what I think about today. Maybe that's what's bothering me. I think the longer term, Gabe was saying, what are the longer term? I think the longer term bulls aren't really doing anything. I think they're sitting on their hands. I don't think they've done anything today. I think longer term bulls picked up some positions maybe yesterday or the last couple of days, and they're just wanting the market to do all the work now. They're like, let's just sit back until sentiment shifts and stuff like that. I'm just so irritated right now. I don't know why. I just feel so irritated. All right, so there's our position right here. These are the two spots where we have some conflict. This one's not working. So I think what's going to happen here is we're going to scoot down some more. I thought this looked pretty good. I think the bulls do want to do that based on what's going on here, but it looks like we're moving down. Maybe we get down to VoLTE. Let's take, I'm going to take a minute. I'm going to take a minute and think about that. That's what I'm going to give me a minute. I need to sit with my thoughts for a moment. I don't think that this is about structure. I think the market is playing on the fact that they know that no trader wants to take a loss into a holiday weekend because you turn into a total jerk to your family. You can't take a loss and then enjoy the holidays. You especially can't hold a losing position and have any fun during the holidays. I think the market wants to close down. That's what I think. And I think it has to do with the fact that people are not, if you're not willing to lose, you'll lose. It's the unwilling nature, it's the unwillingness to lose that makes you an easier target. If you're willing to take a loss genuinely, you're very difficult, or you're willing to be in a losing position, you're sort of difficult to convince out, because how do I get you out? You don't care. And I think going into this close today, the Bulls are not willing to hold a losing position into the weekend, because you can't look across the dinner table before you and your kids go out to shoot off fireworks this weekend and answer the questions that your family might imply with their eyeballs, because that's what families do. I think it's going to try and close as low as possible. Because of the weekend. You can't hold a loser. You can't sit across the table from your spouse's parents and not be frustrated. And then your own mother, who knows you just have a gambling problem, will give you the look. And you're like, ah. I think it's the holidays. It's the holiday pressure. The market knows you can't tolerate that. No, I think there is well, yeah. So here, this is what was just the Independence Day schedule here. XLS. Why don't you just stick it on here? So, yeah. Which just means there are changes to the schedule. So I think that a lot of people are going to be going off to have fun with their families. And I actually think it's going to be more than usual. I think a lot of people need to feel normal again right now. I'll bet a lot of people right now are more than willing to call their families to assemble some sort of event because they need to feel normal and all this craziness that's been going on. So I think the market is seeing a sense of a loss in people's tolerance for negative numbers. Right. And I think that's what's going on. I think people are anticipating this holiday more than most. I want to go blow some stuff up this weekend. So I'm thinking that shift in risk is a very, very real shift, because all the institutional traders, all the people, you can run an algorithm, but over the weekend or not over the weekend, but during maybe holiday hours or something. But at the end of the day, those guys take wonderfully excellent holidays and vacations. And they want to see their families just like the rest of us. So I think that stress is keeping this from, I think that's what shifted the market. I don't want to go into the weekend with a loss looming over me. I think this is going to close low, and I think that this is not based on negotiations. I don't think this is based on structure. I don't think it's going to be based on volume. It's going to be based on the fact that there's a lot of people who absolutely cannot handle it. If you have a 401k or something, let me tell you the conversation you're going to have over the dinner table on Saturday. You're going to hear about people who lost their jobs. You're going to hear about how stressed out it is. You probably fight about whether it should be Trump or Biden. I don't think it's a fight, but you'll talk about it. You're all going to feel the pressure. And people check their 401k and they see the market's gone down right into the close. It just hurts. And so I think the fact that people can't tolerate that right now, and they're going to have to tolerate it in the face of their family, is reducing people's capacity to hold risk. And I think it's driving the market down. I'm a little concerned because I think that there's a lot. We see this every holiday. The market starts to look at a holiday and it tries to say, how do we make as much possible money off of people? But I think this holiday is extra stressful for everybody. I think that's what's frustrating me about this. I think it's annoying. And I think the market wants to close as low as possible so that they can ruin as many people's celebration as possible, so that people are easily triggered on Monday. That's what I think's going on. So we got down to the point where that we're looking at those stops that we were talking about before. People are like, which pointy spot do we choose? And you choose the one that I think we're right. Oh, let's see, right about in the middle. There's a little, yeah, that's the one. That's the one. But I have some serious concerns because I think that that's what the market wants to do. And you can call that crazy if you want, but I believe it's going to alter everybody's behavior individually, and each individual will believe that they are an individual. And it has always been true, let's give you this, it has always been true that the more you feel unique, the more you feel like an individual, the more you herd. It is essential for a herd that each member of the herd feel unique. They are special. I believe that running in a herd would feel something like doing the most unique, individualistic thing you've ever done. And I think that is really important. If you have a herd of animals running off a cliff, the only way that that can possibly continue is if they think they're not following the herd. I think that's the experience. It's the same one that traders get. When you think that you're following, when you're doing your own thing and you're being singled out, you are absolutely being herded. Because I think that animals in herds, they're moving together, feel like they are doing their own unique thing. And then an animal wandering off by itself thinks that it's following the intelligent herd. And humans are terrible at this. The more we think we're following some group of ideals or something, the more we tend to be unique. And the less we tend to feel unique, the more troublesome we are. And there's a big difference between feeling unique and being rebellious. I think just defying rules is not unique. But I think this is the feeling, that if you feel like you're being unique. And I think a lot of people are feeling like, well, I don't want to take any losses. And you think that you're not, that you're some sort of special intelligent creature. But I think everybody's thinking that. I think we're all thinking that right now. We're all going, I don't want to take a loss on the weekend. What's your special reason? Because I don't really like to have a loss looming over me during the weekend. That's so special. Nobody else thinks like you. You're so unique. It's a lie. So the more you feel unique, the more you're in a herd. And consider to yourself the most unique people you know. For instance, a concert pianist. I think one of the hard things to do is practice the piano. I used to play a lot. I loved music. But practicing the piano is such a conformist thing to do. I liked to play, practice. They're different. But if you practice and you conform, you allow yourself, you say, I'm trying to be a good member of the herd, you end up being actually unique. Because there are very few people who become a concert pianist because it's so hard to go with the herd. You want to feel unique. It's so interesting that your emotions are so opposite. The people who genuinely are unique were willing to conform. The people who are bland and basic were unwilling to conform and became a generalization. And so I think that's what's going on here. I think the bulls think they're unique in the fact that they don't want to hold on to a loss, and it's decreasing their ability to tolerate rationality and risk, and it is driving the market to pressure them as much as possible into the close. And so things will probably go back to normal on Monday. I think that's why I'm so utterly irritated with this market. And how I came to that conclusion was I suddenly remembered the feeling of being utterly irritated with the market. Is I always get this way around holidays, the day before. The markets just irritate me. And I think it's just something about the way they work. And I was like, this is a noose. This market's a noose. It's a trick. But it's a noose in that nobody's going to walk away really all that happy in the short term. Longer term, maybe. But I think the market's just trying to hurt people over the weekend. So, a couple of thoughts on that. That's what I think's going on here. Anyway, we got down to our stops right here. I think a lot of people triggered. Obviously, that was the safe place. I think that we're seeing this move down, but it's sort of slow. You know, I wanted to see it curl and get a nice acceleration where you know there was just a big pop of orders. So we're going to have to assume that these people have liquidated their positions. We're going to have to assume that these guys got pressured and that there's a lot of them who are slowly trickling out the door. This wasn't like a, you know, like where you see how that just jerked down, or you get the nice quick pop up. It's like they're slowly trickling in and exiting. It's a slow kind of thing. Slowly trickling in, but we're at these orders here where these guys are going to get hit pretty good. I am really concerned this is not headed back up right now because of the holiday. That's my thought. I think that's what's going on. Markets will do this thing over closes, gaps, especially weekends. If we close on Friday here, if we've been doing this, it's like a slow move down, and then here's the weekend, and then it opens down here. This has the effect of feeling like this. And when you get parabolic downward moves and you're in a position and it is accelerating, I think what happens is you sort of, maybe this is a little much, but essentially what happens is you say, if the market moved in a straight line, you would take the velocity of that line, right? The rise over the run over some amount of time. Let's say it was 3, and you square it. So, and then you say, how long were you in it? And that's X. So X times your velocity squared. And I think this is how you feel. So when you go like this and you accelerate it, that acceleration is like a multiplier on there. So you do acceleration times the amount of time it was happening times your velocity squared. And I think this is how you feel about it. So parabolic moves are excruciating because acceleration is a multiplier. So you feel that velocity squared plus the multiplier of acceleration. And obviously parabolic moves force people out because they are painful. So when you gap down like this, you suddenly experience something similar to a parabolic move. Well, the I think because of the weekend, we don't need to gap the market down to cause that type of pain to pop it up. The pain tolerance is dropped, so the pain is shooting through the roof already without the gap. We don't need it to gap down. So basically, moving down into the close and then popping it up, this right here maxed out the pain because of the full weekend. Normally, without a holiday, you'd want to do this because that gap down maxes out the pain. And so we're sort of backwards right now. I think the weekends can cause this flip-flop. And so we just need to close as low as possible today, and then we can move back up. We can move back up on Monday. And it's setting in on me, and I think I'm a pretty good representative of what's going on in the market institutional mindsets, and I think the bears are going, let's take advantage of this freaking condition. The bulls have turned into snowflakes. I think the bears are going to get violent. I think this is going to be a violent downward move into the close. It's settled in on me. I think it's true. I think the institutions are probably thinking the same thing, and I don't know why you wouldn't just make this as horrible as possible for everyone, just to screw the weekend. So my opinion is that this is a direct attack on the emotional state of traders. You could also think that this is a direct attack on the family, because families can create the most excruciating pain. Your mother can drive more emotions into your heart than anyone else with a look. She knows how to look at you in just the right way. You're like, oh my gosh. Or your father or your sister. They all know how to poke your buttons. So I think that this is essentially monetizing the pain and suffering that you're going to get dragged into if you're long. So there we go. There's our acceleration. There it is. They're done. There, you see how that accelerated popped down? We got to move. It picked up, accelerated. Whoop! Right here. That's the ticket. They are out. Who is out? Make sure that you see the two groups. So there's this group here and this. There it is. There's the liquidation. This is the liquidation bar. We got our sell orders happening here. Trap. So that was it. You see that? That's the acceleration right there that I was looking for. They just got blown out of their positions. I think the market should close low. In 7 minutes, if it could do anything at all, it would close low. Because remember, the weekend. So I think it should close low. Now, without the weekend, if we just eliminated the weekend, say, okay, there's the liquidation. We have ruined their day. Now we need to head back up, and once this opens, maybe we get a holiday grind up, kind of thing or something. But Monday, I think that these guys are now in the target, the crosshair of the market. But with the weekend, I'm thinking we close as low as possible to just really just frustrate the crap out of you. Issue is going to be, though, tomorrow, futures are going to grind a little bit, and they'll probably move back up, which will make you feel better, which is a problem. So really got to close this lower because we got a whole day in between today and the holiday this market seeks to destroy. It's not the holiday they want. Sorry, I just cracked my knuckles. I didn't even think about that. I don't think it's the holiday they want to destroy. It's just to make you sort of hate your experience. Close low. Close right on that gap closure, something low. Don't let it pop. If you let it pop, a lot of people will probably dump whatever they got at as high as price they can to salvage that whole conversation over the dinner table. So they got them. And, oh, take a look at that. So this is one of the cool things, too, that I really like about Bull TWAP. You see that? It started to tick down right as they got liquidated. So we were able to verify here that not only was their liquidation impacting the broad market, but we're also able to see that there was volume with high enough volatility. I mean, this volume mattered. It impacted VoltiWop. So you can see that even showed us there as they got liquidated. So I don't think this is headed back up. We got to close low to ruin the holiday. And I think this is about the holiday. I want to make that clear. I do not think this is technical. This is about the holiday. This is because they know the big fat traders up there at the top also have families. It is a weakness to have a family. We all know that. You've watched enough superhero movies to know that having a family and love is a weakness, and this is why. So, no, this is not bad. I don't think this is bad. I think this is normal in that we see this before holidays all the time, but I do think this is about the holiday. This is about pressuring as many people as possible to feel like horrible crap going into the holiday, and to the whole reason you do that is not because you care about the holiday. It's because these actions drive risk up, or sorry, the risk tolerance down. So you're tolerating a risk, and the fact that you can't tolerate it inherently increases your risk of getting blown out of the market. So I think just pushing down, they're finding all these people who just can't do it. Wins in the end? What do you mean, Burger? I don't think this is going to pop up into the oh, there's somebody playing with Legos. I don't think it's going to pop up. I don't think it should. I think it should close. So the last 4 minutes, just close as low as possible. That's what I think.
Oh, look, the gear go.
I'll bet.
It's turning a little Lego.
Nice. I'll bet the market is suspiciously quiet tomorrow. I'll bet people just don't even show up. It's they always do it to the bulls. Yeah, it could have it could have, but they almost never do it to the. It's always been. I mean, it's not. There's almost. I keep using these crazy qualifiers. I have never seen them do it to the Bears. I think it has to do with people, with everyone. Yeah. If you push the market up, there is a very large body of people who don't even know what shorting is. And so I think that this is not just pressuring the bullish people with money, but it's pressuring anyone with a 401k, anyone with a stock, anyone, anywhere. Everyone feels that pressure. And I think there's just more people who tend to buy than there sell. I've never seen them do this into a holiday to the Bears. I've just never seen it. But you're right, they could have. There's no reason that they couldn't do these sort of silly games with the Bears. You are, yeah. But in this instance, my opinion was bullish. Remember, we had built out the scenarios and we were right. We were right. And then at some moment, it just made me mad. I just got mad. And I couldn't figure it out, so I'd take a minute. And as I thought about it, and I sort of was rolling over numbers and markets and everything, just trying to be abstract, it just hit me. This is about the stinking holiday. And that was how I came to that conclusion. It frustrated the crap out of me so much, I needed a minute. And I think this is about the holiday. So they could have done it to the Bears, but I think essentially my conclusion, I mean, I came to that conclusion. I was like, okay, we got this. We got the ruin. We're going to get the ruin. And then I don't know. I just freaked out. And I think that I've been through this so many times. I was picking up on that. And we also had the symbology, if you remember that. So we had their little, remember I was pointing this out? Is that the same algo? So are we going to get the same outcome? I was alluding to symbology, and that's what they do. You do the same thing that everyone can everyone see it? Yes. That's how you run symbols. Oh, symbology. Yeah, so he was just bringing. Yep. Yes. He picked up. It's the exact same thing he picked up on. So I think this is about ruining the weekend. In other words, this was all bullcrap. All of it was bullcrap in terms of structure, in terms of everything. I think everybody just pulled back. And that's all this is about. So irritating. It frustrates me. And I'll tell you what irritates me about this the most. I like getting what I want in trading. I like to see it coming. I like to see the structure. I want to play with big players. I want to pressure this, that, get the liquidation. I want to see everything just work exactly like I want. And maybe I'm being a little controlling, but this kind of stuff, it's sort of exception stuff where you have an exception to the rule. It's not based on the type of structure that I like, which is tracking buyers and sellers and institution. You know, there's a lot of structure to it. And this whole thing just, it's just like, okay, fine, you know, whatever. And I don't like trading this stuff. I know that you could make some money here, but I hate it. I think it's, yeah, I think I'm gonna show up for a little bit tomorrow to see kind of what futures do a little bit. Also remember that as best as possible, the stat ADI will run on holidays. So you can use that to get an idea, but just remember there's going to be less data and it does its very best. And so just make sure you guys know about that. The stat ADI, you go onto the Trade Trust Group website, I'm pulling it up now, and you go ahead and get that. So this will run on the holidays. So it will be running tomorrow. So you can use this as a metric for your advanced declines and stuff like that, and it'll sort of give you but just remember that it does, I programmed in so that the program does its best with what's available. It determines what's available, uses all those data sets, and then it does its best. So if there's less data, you know, it just works with what it's got. So it will run on a holiday though, and I think we'll be able to get sort of an idea about that. But I think this whole dip down right here was all about wrecking the holiday. I think the structure of today was sort of annoying. I think that the bulls coming in and acting like they were just totally going to lie to the bears was childish. It was like, what? And it put these guys in like, oh my gosh. And then it leaned back, and then we had another bullish position. And then it struck me right here. This is not about analysis anymore. So that's where we're at. I think that on Monday, the things that you should watch for. So let me just quickly, because we've already laid this all out. It's pretty simple. Whoops. I'm going to mark it down here because the trapped orders. You should be paying attention to this position here. And I'll tell you why. This one had me convinced that was it. This is going to be a legitimate position. Anytime the market can create analysis and structure that persuades me to think that this is going to be good and then falls apart, that's a spot to watch. This is going to be a spot. I assume if they convinced me, they convinced a lot of people who pay attention to this kind of stuff. So that's the position to watch. This is the rebound point. Things move higher. This is the first set of stops to take. I'm not sure that we'll take out today's high. That's not really on my type those people out. That's what I want. So that's where I'm at. The thing that we need to see, this moved into, you know, regardless of the holiday nonsense and whatever, we ended up actually getting into some burn off. And so we did burn tension down 40%, not great. So I think on Monday, the bears are going to be saying to themselves, hey, let's keep that burn going, right? Wouldn't you? Now, that means that on Monday, these bears are going to need to act again. And if prices come back up and they're pressuring their precious position, I think any move up, honestly, it will be enough to say, hey, bears, you need to prove it again. You need to prove it again. I think that's what's going to happen. So we'll need to see a further bearish position. And then we'll need to see a sample or something. We're going to need to see these bears reestablished because I think this whole thing was bullcrap. So the move down was disingenuous in nature. It was not the effect of bears' success. It was the effect of the market taking advantage of something else. I think bears need to reestablish. If we don't see bears come in on Monday, this is what I think is going to happen. We are going to go straight back up through those and probably back up to the day's high. And then in the end, you'll look back and say, boy, that looks like a trap. This is where we are. If these bears can't reestablish and immediately keep this going, I think the investment world's going to go, awesome. So that's what I'm looking for on Monday. And the other thing that I think is really important on Monday, the bulls must have liquidity. There is no room. We had them get liquidated. They cannot run the market without some position to operate from. You could sort of tolerate some teeth here. This was not that. This was blatant destruction of the bullish position based on the fact that bulls could not tolerate it. They have got to fill. So Monday morning is going to be a big deal for me. And it's going to look like a pretty decent move because it's going to screw a lot of people. I think there should be some pretty decent money to be made Monday and Tuesday. Some precautions. The last time we saw this, I think it was last Thanksgiving. It was last Thanksgiving. I remember. We had the stat ADI helping us out. I wish I had a searchable index so I could just pull this up. I wish I could be like last Thanksgiving and show you. But essentially this last time that this happened, what occurred at the open was that the stat ADI was giving us a signal right around the same time. And then instead of triggering the signal, the market drilled down and closed into Thanksgiving. It popped up, gave us a little bit of a range, which was frustrating. And then it did this. So it ended up working. It ran like 30 or 40 points. And then it ended up dipping an extra 50 and then ran like 300. And what I think happened was so many people dumped here that this response was sort of a knee-jerk response, right? Like everybody dumped, so it popped up, of course. But then everybody was buying because they realized what was happening, which drove it down. But they weren't covering because they knew what was going on, so it ripped them out and then it ran. So just be aware of that we could get a really good pop up, and if the structure doesn't show up, be concerned the market's going to give us one last run. So it's like I got screwed into the holiday and I got screwed after the holiday, and then it's going to take off into something aggressive. What's nice about this, we have some great conflict. There's going to be good trading on Monday and Tuesday. Do not miss it. I just remembered something. Crap. I'm not going to be here Monday and Tuesday. No, I'm not going to be here. I have to leave. I will be gone. I have some family business. I need to drive across the country. So I'm not going to be here. I have laid out what needs to happen. We have got to see if those bears cannot recontrol the market, there's going to be this massive precedent to shove the market up. The bulls really, really, really need a good position for that to happen. If the bulls don't get a position, it's just going to operate like a knee jerk. So the bulls got to get a position. The bears show that they can't control it. We shoot up. If the bears come in and they shove and they can keep the elasticity going, it may be that the bulls concede and say, "We'll just let this keep going, and then we'll buy into some prices while they burn." Something like that. So Monday's first 2 or 3 hours is going to play an incredible role in how the entire week plays out because of this holiday. So that's what I'm looking for. I won't be here on Monday or Tuesday. I'll be back on Wednesday. I'll try to post some notes. I can take a screenshot of my computer, post notes on where the bulls and the bears are to kind of show some, at least what I see. But really what you should do is hop into the Discord. There are a lot of competent people in there who know how these systems works, and they have other analysis. So make sure you're in there. Chat, talk, ask. The best thing to do is just simply track the liquidity samples. Pay attention to where that they would probably liquidate. Keep your eye on tension and just keep looking forward. It is devastating for traders to stop and turn around and look in the past. There's nothing for you there. You need to just keep a track of who's playing right now and what the possibilities look like. Just keep looking forward. Where's this going? What's next? What's next? What can we get? Where's liquidity? Just keep your nose in that direction. Okay. I hope this was useful. Today was sort of rough, but fun. I think there was a lot of awesome drama. It was stressful, fun, good, interesting. Sometimes I was up, sometimes I was down. Just, keeping up with that narrative can take a lot. But I think the opportunities are going to be Monday and Tuesday, which I'm a little bummed about because I'm not going to be here. But I hope this is useful, guys. Have a good weekend. Enjoy the holiday. Try not to think about trading. I'm going to try not to. Blow some stuff up. Get this stuff out of your system. I think everybody's stressed about all the news. I'm not going to watch a lick of news. Not a bit of it. I'm not going to check my Twitter. I'm not going to read nothing until I have blown up some fireworks. I want to forget all of it. I want to come back and on Sunday, I want to be like, oh yeah, I forgot. I do that. Okay? Yes, the Zoom will be going on. Good question. I will keep the Zoom going. I set it up so I could operate that mobily. So I can make sure that the Zoom gets set up and run. So those will be running. The charts online will be running. The room will be going. Share your thoughts. The best way to filter good and bad ideas is to make sure you're sharing it with a community that you believe has your best interest in mind, that is like-minded. Share. Everything will be up and running. I just won't be here. I'll try to post some comments, so just so you guys know. All right, guys, have a good weekend. I will see you Wednesday.